Stocks are down. Stocks are down. Oh, snap. Hello, Apple. Take me to your earnings call.
Now I'd like to take a closer look at results from across our lineup, beginning with iPhone. As I mentioned earlier, it was a fantastic quarter for iPhone with an all-time revenue record of $85.3 billion, up 23% year over year. This is the strongest iPhone lineup we've ever had, and by far the most popular. Throughout the quarter, customer enthusiasm for iPhone was simply extraordinary. Users were incredibly excited about everything it enables them to do.
Simply extraordinary.
iPhone 17 Pro and 17 Pro Max deliver the ultimate iPhone experience. They feature the best ever performance and battery life on an iPhone, the most advanced camera system, and a striking design. iPhone Air, our slimmest and lightest smartphone yet, packs powerful capabilities into an ultra-slim and sleek design. And iPhone 17 is a truly fantastic upgrade at an incredible value. Turning to Mac, revenue was $8.4 billion for the December quarter. We were pleased to see the Mac install base reach another all-time high, with nearly half of customers who purchased a Mac being new to the product. The M5-powered 14-inch MacBook Pro takes a huge leap in AI performance thanks to the next-generation GPU architecture and a faster neural engine. From the world's most popular laptop for consumers and businesses in MacBook Air to the small and spectacular Mac Mini, every Mac in our lineup has something special to offer users. And with the recently released Apple Creator Studio, available across Mac, iPad, and iPhone, creators have more tools at their fingertips to make incredible music or turn their devices into a video production studio.
Apple's crushing it, yo.
Meanwhile, iPad saw December quarter revenue of $8.6 billion, up 6% from a year ago, with an all-time record for upgraders.
Check Capital.
We are proud to have our strongest lineup ever, from iPad powered by A16, which is proving to be incredibly popular, to iPad Air with its amazing versatility, to the unbelievably powerful M5 iPad Pro with its remarkably thin and light design.
Rich topic.
It's no wonder
Edwin,
that iPad
Lauren, how we
continues
doing,
to be
guys?
the most popular tablet in the world. Across wearables, home, and accessories, revenue was $11.5 billion. With Apple Watch Ultra 3 and Apple Watch Series 11, users are tapping into a comprehensive set of health and wellness features to help them meet their health goals.
Freaking day. Let's go, bro.
In a recent survey, we see an increasing number of users telling us they're wearing their watch to sleep, which allows them to check their sleep scores each morning and find ways to improve their sleep quality. And Apple Watch alerts are enabling important conversations between users and their doctors regarding potential signs of hypertension. These are just some of the many ways that Watch is helping people live healthier lives. The response to AirPods Pro 3 has been amazing. Customers are raving about the rich, immersive sound quality, the unmatched level of active noise cancellation, and the noticeably improved comfort that makes them effortless to wear. Features like live translation are also changing the way people can communicate by helping users connect across languages in real time and making everyday conversations feel more natural and accessible. Together, these innovations create an experience that feels both powerful and personal, and the enthusiasm we are seeing reflects just how strongly AirPods Pro 3 are resonating with customers. Across our product categories, we are seeing very high levels of customer satisfaction, and we are proud to report that we have a new record for our installed base with more than 2.5 billion active devices. During the quarter, we were excited to see that the majority of users on enabled iPhones are actively leveraging the power of Apple Intelligence.
Wait, Edwin, let's talk about that.
Since the launch of Apple Intelligence, we've introduced dozens of features, including writing tools and cleanup, and made it available in 15 languages. These AI experiences are personal, private, integrated across our platforms, and relevant to what our users do every day. We are bringing intelligence to more of what people already love about our products so we can make every experience even more capable and effortless. One of our most popular features is visual intelligence, which helps users learn and do more than ever with the content on their iPhone screen, making it faster to search, take action, and answer questions across their apps. And as I touched on earlier, we are hearing powerful stories of people using live translation to communicate seamlessly across languages. And these are just some of the many powerful AI features that are enabling our users to do remarkable things with our products, which are far and away the best platforms in the world for AI. That's in no small part because of the extraordinary power and performance of Apple Silicon. Building on our efforts in the AI space, we are also collaborating with Google to develop the next generation of Apple Foundation models. This will help power future Apple Intelligence features, including a more personalized Siri coming this year. We're incredibly excited for what's to come with so many new experiences to unlock. Turning to services, we achieved an all-time revenue record of $30 billion, 14% higher from a year ago. Services also set all-time revenue records in both developed and emerging markets. Apple TV has seen fantastic momentum, with December seeing a 36% increase in viewership over the previous year. It's no wonder with shows like Pluribus, which are creating landmark cultural moments that audiences are loving. Anticipation is building for upcoming new productions like Cape Fear from Steven Spielberg and Martin Scorsese. And we are thrilled to announce that Ted Lasso will be returning for a 4th season this summer. 6 years since launch, we're excited by the growing enthusiasm viewers have for Apple TV, and we are grateful for the accolades that have followed, most recently at the Critics' Choice and Golden Globe Awards. To date, Apple TV productions have earned more than 650 wins and more than 32 nominations, including a recently announced Oscar nomination for Best Picture for F1, the movie.
They crushed it. F1
and
crushed it.
Speaking of F1, we're also approaching the start of a new Formula One season, and for F1 fans in the U.S., Apple TV will be the place to watch every practice, qualifying, sprint, and Grand Prix. MLS fans will also be able to watch every regular and postseason game with their Apple TV subscription this year, and we're looking forward to kickoff in the coming weeks. Looking back, 2025 was a fantastic year for services as we rolled out amazing new features and broke records. Apple Music climbed to all-time highs in both listenership and new subscriber growth. Apple Pay eliminated more than $1 billion in fraud for our partners last year, and we've made it available in more markets than ever before. And last year, we welcomed more than 850 million users every week on average to the App Store, the world's safest and most innovative app marketplace. Developers have now earned more than $550 billion on our platform since 2008. In retail, we continue to bring a magical experience to our customers all around the world, and we were thrilled to have our best ever results in retail during the quarter. We were excited to open our 5th store in India in December and have plans to open another store in Mumbai soon. Wherever we are, we see ourselves as part of a larger whole. That's why we show up with our values in everything we do. That means working with partners in places like Vietnam to bring more clean water to rural areas. It means celebrating graduations of new classes of innovators from our developer academies in places such as Brazil, Indonesia, and South Korea. It means 3D printing titanium cases for Apple Watch using recycled materials so that they're better for the planet without compromising quality. And so much more. We're especially proud of the work we're doing to support American innovation. Last year, we committed to invest $600 billion over 4 years in vital industries like advanced manufacturing, silicon engineering, and artificial intelligence. As we're building on our longstanding investments in America, we're supporting nearly 500,000 jobs with thousands of suppliers across all 50 states. In the year since we made our initial commitment, we're making great progress. Today, we're shipping servers to power Apple Intelligence from our new manufacturing facility in Houston. Through our advanced manufacturing program, we're working with Corning in Kentucky to make 100% of cover glass for iPhone and Apple Watch. We're working with Micron, which broke ground on a new advanced chip packaging and test facility, and we continue to advance the development of an end-to-end silicon supply chain across the country, sourcing 20 billion U.S. chips in 2025. Through our Apple Manufacturing Academy in Detroit, we're already training American businesses and innovators on the latest smart manufacturing and artificial intelligence techniques. 6 months since opening, the Academy is already making an enormously positive impact for businesses working alongside Apple engineers to drive productivity, efficiency, and quality in their supply chains. As I said at the beginning of my remarks, this was in so many ways a remarkable quarter for Apple. And we're excited for all the opportunities we'll have in the year ahead to deliver innovations that have never been seen before and enrich the lives of users every step of the way. With so much to look forward to in the weeks and months ahead, I have every confidence that our best work is yet to come. With that, I'll turn it over to Kevin.
Thanks, Tim, and
W
good
Apple.
afternoon, everyone.
W
Our
Apple, they're
revenue of
crushing it.
$143.8 billion was up 16% year over year, our best quarter ever. Across the world, we set all-time revenue records in both developed and emerging markets.
And what's good,
And we saw
man?
double-digit growth year over year across the majority of the markets we track, including the US, Latin America, Western Europe, Greater China, India, and South Asia. Products revenue was $113.7 billion, up 16% year over year, driven by double-digit growth on iPhone, setting a new all-time record. And as Tim mentioned, thanks to our strong levels of customer loyalty and satisfaction, our installed base of active devices has now surpassed 2.5 billion, reaching another all-time high across all product categories and geographic segments.
Dang.
Services revenue was $30 billion, up 14% year over year. This performance continues to be broad-based with double-digit growth in almost every market we track. We also reached all-time revenue records for advertising, cloud services, music, and payment services with December quarter records on the App Store and video. Company gross margin was at 48.2%, above the high end of our guidance range and up 100 basis points sequentially, driven by favorable mix and leverage. Products gross margin was 40.7%, up 450 basis points sequentially, driven by favorable mix and leverage. Services gross margin was 76.5%, up 120 basis points sequentially, driven by mix. Operating expenses landed at $18.4 billion, up 19% year over year. This was within the range we provided and driven by increased investment in R&D. Net income was $42.1 billion, and diluted earnings per share was $2.84, up 19% year over year. Both net income and diluted EPS were all-time records, and these incredibly strong business results drove an all-time record for operating cash flow, coming in at $53.9 billion. Now, I'm going to provide some more details for each of our revenue categories.
Talk to me.
iPhone revenue was $85.3 billion, up 23% year over year, driven by the iPhone 17 family. iPhone saw strength around the world, reaching all-time revenue records in many of the markets we track, including the US, Greater China, Latin America, Western Europe,
Garrett, what's up,
the
man?
Middle East,
Welcome back, bro.
Australia, and South Asia, as well as a December quarter record in India. The iPhone active install base grew to an all-time high and set a new all-time record for upgraders in aggregate and across many countries, including the US, China mainland, Japan, and India. According to a recent survey from World Panel, iPhone was the top-selling model in the US, urban China, the UK, Australia, and Japan.
Dang.
Customers are loving the latest iPhone lineup. The latest customer satisfaction for the iPhone 17 family in the US was measured at 99% by 451 Research.
$400 billion a year.
Mac revenue was $8.4 billion, down 7% year over year. As we described in the last call, we faced a very difficult compare against the M4 MacBook Pro, Mac Mini, and iMac launches in the year-ago quarter. Despite this difficult compare, we continued to see growth in several emerging markets, including Brazil, India, Malaysia, Vietnam, and more. And as Tim mentioned earlier, the Mac install base reached another all-time high, with nearly half of the customers who purchased a Mac being new to the product. And in the US, customer satisfaction for Mac was measured at 97%. iPad revenue was $8.6 billion, up 6% year over year, driven by the M5-powered iPad Pro and the A16-powered iPad. We continue to add new users to the iPad. In fact, over half the customers who purchased the iPad during the quarter were new to the product. This helped the iPad install base to reach an all-time high, and we also reached an all-time high for upgraders. Based on the latest reports from 451 Research, customer satisfaction was 98% in the US. Wearables, home, and accessories revenue was $11.5 billion, down 2% year over year. During the quarter, we experienced constraints on the AirPods Pro 3, and we believe the overall category would have grown had it not been for these constraints.
AirPods aren't selling, yo.
The wearables install base reached a new all-time high, with over half of customers purchasing an Apple Watch during the quarter being new to the product. And in the US, customer satisfaction was recently reported at 96%. Our services revenue reached an all-time high of $30 billion, up 14% year over year. As we said earlier, we had all-time revenue records on advertising, music, payment services, and cloud services, where we saw double-digit growth on paid subscribers. We continue to be optimistic about the future of our services business. With our install base of over 2.5 billion active devices, we have an incredibly strong foundation for new growth opportunities. We saw increased customer engagement across our service offerings, with both transacting and paid accounts reaching all-time highs in the quarter. And we continue to improve the quality and expand the breadth of our services offerings. From new wallet features like Digital ID, which provides a way for users to create an ID in Wallet using information from their US passport, to additional ads coming to search in the App Store,
Garrett, where'd you
which
get
provides
265,
advertisers
270?
more ways to drive downloads from search. Turning now to enterprise, organizations are continuing to expand their fleet of Apple devices to drive productivity while remaining secure. Snowflake has deployed over 9,000 Mac devices company-wide, establishing Mac as a primary laptop across all business units, resulting in increased performance and a reduction in support tickets. AstraZeneca is rolling out over 5,000 M5-powered iPad Pros to its pharmaceutical sales team to take advantage of AI capabilities, including Apple Intelligence, while meeting with clinicians daily. And in Mexico, Coppel, the country's largest domestic retailer, recently added MacBook Air in addition to a growing fleet of over 10,000 iPad devices. Let's turn to our cash position and capital return program.
They're sitting on a lot of cash.
We ended the quarter with $145 billion in cash and marketable securities. We had $2.2 billion of debt maturities and decreased commercial paper by $6 billion, resulting in $91 billion in total debt. Therefore, at the end of the quarter, net cash was $54 billion. During the quarter, we returned nearly $32 billion to shareholders. This included $3.9 billion in dividends and equivalents, and $25 billion through open market repurchases of 93 million Apple shares. As we move ahead into the March quarter, I'd like to review our outlook, which includes the types of forward-looking information that Suhasini referred to. Importantly, the color we're providing assumes that global tariff rates, policies, and their application remain in effect as of this call, and the global macroeconomic outlook does not worsen from today. We expect our March quarter total company revenue to grow by 13 to 16% year over year, which comprehends our best estimates of constrained iPhone supply during the quarter. We expect services revenue to grow at a year-over-year rate similar to what we reported in the December quarter. We expect gross margin to be between 48% and 49%. We expect operating expenses to be between $18.4 billion and $18.7 billion, which is at a similar level to what we reported in the December quarter and driven by higher R&D on a year-over-year basis. We expect OI&E to be around $100 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 17.5%. Finally,
Apple's only paying
today our
17%
board of directors
taxes.
has declared a cash dividend of 26 cents per share of common stock payable on February 12th, 2026, to shareholders of record as of February 9th, 2026. With that, let's open the call to questions.
Apple's on.
Thank you, Kevin.
tear.
We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Certainly. We'll go ahead and take our first
Look at
question
this.
from Amit Daryanani of Evercore.
What's up, Amit? Let's see if they answer my question.
Yes, I have two. Maybe to start with, there's a lot of focus on the impact of memory to a host of companies, and I'd love to kind of get your perspective when you folks are guiding
Here goes
gross margins
memory.
up into the March quarter. Just talk about, A, your comfort in securing the bits that you need for shipment, and B, how do we think about memory inflation flowing through Apple's model over time?
Memory.
Yeah, Amit, hi, it's Tim. Let me back up a bit and talk about the constraints that Kevin referred to in his remarks and memory.
Let's see.
Try to get both of these out at once.
Hold on. Here we go.
First of all, we were thrilled with the customer response on the latest iPhone lineup. It exceeded our expectations, to say the least. And, iPhone grew 23%. What the result of that was that we exited the December quarter with very lean channel inventory due to that staggering level of demand.
We ain't messing
And
around.
based
Yeah,
on that,
what's up,
we're
baby?
in a supply chase mode to meet the very high levels of customer demand.
Thank you for subbing, King Kofi.
We're currently constrained, and at this point, it's difficult to predict when supply and demand will balance. The constraints that we have are driven by the availability of the advanced nodes that our SoCs are produced on. And at this time, we're seeing less flexibility in the supply chain than normal, partly because of our increased demand that I just spoke about. From a memory point of view, to answer your question, memory had a minimal impact on the Q1, so the December quarter gross margin. We do expect it to be a bit more of an impact to the Q2 gross margin, and that was comprehended in the outlook of 48 to 49% that Kevin gave earlier. Beyond Q2, we don't obviously provide outlooks beyond the current quarter, but we do continue to see market pricing for memory increasing significantly. As always, we'll look at a range of options to deal with that. So hopefully that gives you the full view.
No, thank you. And I appreciate all the clarity on that, Tim. Maybe the other second question I have for you is, maybe just touch on the China strength you folks had. I think this is very close to all-time high revenues we've had in China. What's driving the strength over here, and just sort of the durability of the growth rates we saw in the December quarter would be helpful to understand. Thank you.
Sure. Greater
Here's something else
China
about the
was
rip,
up
y'all.
38% year on year. It was driven by iPhone, where we set an all-time revenue record. So it was the best iPhone quarter in history in Greater China. It's driven by the customer enthusiasm for the iPhone 17 lineup. And I would tell you that during the
You got the new
quarter,
iPhone?
traffic in our stores in China grew by strong double digits year over year. It was a terrific quarter. Our installed base reached an all-time high in both Greater China and mainland China.
Hey, if y'all just now tuning in, make sure y'all hit that like button and make sure y'all vote in the poll based on what we're learning and what we're hearing. Are you a buyer or are you a seller of Apple? Apple is absolutely crushing it. iPhone sales are up at all-time high. China sales are up all-time high. Services are up all-time high. They had good guidance. The only weird thing that I heard is just gross margin compression in second quarter, largely due to supply chain inflation prices in things like memory, lithography devices and little things like that. So, but it's literally the exact same narrative for everyone that's producing something of scale that has any type of semi or AI value chain. But vote and poll, you guys buyers or sellers of Apple? Because it sounds like they're freaking crushing it, y'all. Hey, and do y'all got the iPhone? Y'all got the new iPhone? I fell into that trap.
New to that product. So that's a very good sign for us.
I love it though.
And if you look at iPad,
Play a lot of
on that
games on
same
there.
survey, iPad was the top tablet model in urban China.
Gary, you think we're gonna have a
And
shutdown?
according to Counterpoint,
I hope not, bro.
the MacBook Air was the top selling laptop model, and Mac Mini was the top selling desktop model in the December quarter. So overall, great quarter in China. We could not be more happy with it.
Awesome. Thank you, Amit. Operator, could we get the next question, please?
Our next question is from Eric Woodring of Morgan Stanley. Please go ahead.
Great, guys. Thank you for taking my questions. Tim, congrats on announcing the partnership with Google, and we're all excited to see what you bring to market later this year.
iPhone 12.
When I think about your AI initiatives, it's clear there are added costs associated with that. We're obviously seeing that flow through in OpEx. Can you help us understand maybe what the revenue upside potential that exists with AI? Many of your competitors have already integrated AI into their devices, and it's just not clear yet what incremental monetization they're seeing because of AI, but you're always disciplined with investing. You obviously have a differentiated product. So how do you monetize AI, and what's the timeline to realizing that ROI? Then a quick follow-up. Thank you.
That's like a basic.
Well, let me just say that we're bringing intelligence to more of what people love, and we're integrating it across the operating system in a personal and private way. And I think that by doing so, it creates great value, and that opens up a range of opportunities across our products and services. And we are
Okay, super helpful.
And we're very happy with the collaboration with Google as well, I should add.
Okay, thank you, Tim. And then maybe just a follow-up. Now that you have kind of more time and data to evaluate this cycle, can you maybe help us understand what the primary factors are driving strength in the iPhone? I'm sure there's a number of factors, but if you had to point to one or two, just what would they be, and how sustainable do you think those are?
I think it's different for different cohorts of where people are coming from in the device that they have, but it's a combination of things always that make the product sing. It's the display, it's the camera, it's the performance, it's the new selfie camera, it's the design. The design is beloved. And so it's all of these things that come together at once and are producing a very strong product cycle, as witnessed by our December quarter results.
Great. Thank you, Tim. Best of luck.
Yeah, thank you.
Awesome. Thank you, Eric. Operator, could we get the next question, please?
We'll now go to Michael Ng of Goldman Sachs. Please go ahead.
Wonderful. Good afternoon. Thank you for the questions. I have two as well, if I could. First, it was encouraging to hear about the revenue growth outlook of 13 to 16% for the March quarter. I was just wondering if you could, talk about any comps that we should be particularly aware of as we kind of think about each of the product categories. I know last year you guys had, MacBook Air with M4, the iPhone 16e, the iPad A16, and the iPad Air with M3. So just wanted to, ask if those things would create tough comps, or is it just less of an issue just given the new product outlook? Thank you.
Yeah, Mike, it's Kevin. How are you? Thanks for the question. Yeah, I wouldn't say there's any particular
These guys are overthinking it.
As you recall, last
iPhone
quarter we
sales are
talked about the
crushing it. That's
difficult
all you need to
comparison
know.
we had a Mac, but there's nothing that rises to that kind of color that we'd outline, in the outlook. And so I think it's just, continuation of the strong cycle we're seeing, subject to the constraints that I had mentioned in the prepared remarks and that Tim, alluded to a little earlier as well.
Great. Wonderful. And then, just on services, advertising, strong in the quarter. I wanted to ask about some of the, new growth opportunities in advertising. I know you guys are doing the new ad slots in the App Store. Maybe you could just talk a little bit about that, and then any plans to do more in advertising across other products like Maps or TV. Thank you.
Yeah, sure. Like what I would say, just if I step back in general, I think as we outlined, we saw really good broad-based performance in our cross services business. So ranging from all-time records in advertising, music, payment services, and cloud services. So I think we see really good opportunities across a lot of our service categories, and we continue to add new service offerings. We talked about what we added to the wallet, like digital ID, and you referenced the additional additional ads coming into search in the App Store, which we are excited about. It provides advertisers more ways to be discovered. And so I think we'll continue to look for
China
ways
sales
to
are actually
expand
declining.
opportunities to add value to users, and also create opportunities for Apple. I think as we talked about, we created crossed a really significant milestone at 2.5 billion active devices. So we really feel excited about the opportunity that provides for our services business as well.
Wonderful. Thanks for the thoughts, Kevin.
Awesome.
Sure thing.
Thanks,
Thank
Kevin.
you, Mike. Operator, could we get the next question, please?
The next question will be coming from
Kenny Finance.
Ben Reitzes of Melius. Please go ahead.
Kenny Finance of Chat
Hey
Capital.
guys, how are you?
Hi, Ben.
Hi, Ben.
Hey, Tim. First question is on Google partnership again. I wanted to understand how you came to that decision with regard to the AI and Siri in particular, and if there's an opportunity for you guys to share in revenue too with that partnership like you do in search. Thanks.
Yeah, we basically determined that Google's AI technology would provide the most capable foundation for Apple Foundation models. And we believe that we can unlock a lot of experiences and innovate in a key way due to the collaboration. We'll continue to run on the device and run in private cloud compute and maintain our industry-leading privacy standards in doing so. In terms of the arrangement with Google, we're not releasing the details of that.
Bummer.
W
okay,
Google.
well, I tried.
You did.
So, yeah, you knew it would be me. So the next question is on gross margin. I'm pretty shocked. I gotta hand it to you, Tim.
This guy's very
that
casual.
you're able to do 48 to 49.
He's a chiller.
What's really going on there? How are you doing that with this memory, the NAND prices? Is it due to mix that there's a less hardware and more services, and services margins are going up? How are you doing it to keep it at 48 to 49?
Yeah, Ben, this is Kevin. How are you doing? Let me start maybe by just reflecting on the Q1 gross margin. I think we talked about the fact that we landed at 48.2%, so just above the high end of the range that we provided, on the last call. And I think if you look at that performance, we were up 100 basis points sequentially. We talked about the fact that we had favorable mix. I mean, as you know, when we have a good product cycle, strong product cycle, we're seeing for iPhone, that does lend itself to a bit more favorable opportunity on the mix and leverage side. So we're having a strong iPhone cycle, as Tim outlined. And so that also translated itself. So we talked about products sequentially went up by 450 basis points. So I think in general, we're just seeing favorable mix dynamics as well. Services continues to contribute as well. That business is growing, double digits. So that also is a contributor. And I think that, as we looked at our guidance, we're providing a similar range to where we reported in December. And there's going to be a few puts and takes. We do expect to see favorable mix into services. As you know, when we move from Q1 to Q2, that tends to be the case. And that's partly offset by a seasonal loss of leverage. So there'll be puts and takes. But, again, we feel pretty good about the guide of 48 to 49%. which is similar to the range we reported in December.
Wow. Okay, great. Thank you.
All right. Thanks, Ben.
why you
Operator,
out here
could we get
retracting
the next
messages,
question,
man?
please?
The next question will be coming from David Vogt
Next
of
question
UBS.
from Alex Boogie at Chat Capital.
Great. Thanks, guys, for taking my question.
Next
Maybe-
question
maybe Tim or
from
Kevin, if we could pull out a little
Edwin
bit.
Rodriguez from
Can
Chat
you help
Capital.
us understand how you're thinking about the overall kind of smartphone market demand, particularly given where memory prices are headed? And we've heard some conversations with some other OEMs as well as component providers that are worried about either the availability of components, potential market weakness in terms of demand destruction, if some of the actions to offset or higher prices. I know you don't give outlooks for the full year, but how are you thinking about all of those different vectors and what that might mean for the overall smartphone market?
Even after hours
and then
up
ultimately
13%.
what that might mean for demand for iPhones as we move through
Am I
the rest
just
of the
dumb,
calendar year.
or I keep missing earnings?
Yeah, on the
memory.
supply side, I had made comments earlier about the constraint
Nemrose, what
that
up,
we
man?
are seeing in Q2. You know, and that's reflected in the revenue guidance that Kevin gave earlier. The constraint, as I'd mentioned, is due to the advanced node capacity.
Oh, y'all,
and it's really a result.
Hey, y'all, we messed up. We messed up big time. He ain't saying nothing. iPhone sales are continuing to rip. We screwed up. We watched the wrong earnings. Boys, girls, we're supposed to be on SanDisk. SanDisk has earnings right now, too. Oh, my goodness. Let's see if we can still join it. Are you guys still on? Oh, no, theirs was really early. Theirs was like in the afternoon. Or no, not really. Let's see. SanDisk released earnings. SanDisk is the number one narrative in the stock market right now. Number one. But, all right, just for thumbnail purposes, let's just finish whatever you have to say. Come on, guys.
On memory pricing. And so hopefully that answers your question. Oh, in terms of in terms of smartphone demand, you know, we believe that based on the information that we've got is we gained share in the December quarter. Obviously, the market wasn't growing at 23%. So we feel good about doing that. And but I wouldn't want to predict how the market reacts in the future. It's very difficult to do that.
Got it. At the risk of not getting this answered, I'm going to follow up with, can you maybe help us understand, you know, you mentioned there's a range of options that you're looking at. How should we think about kind of like LTAs in the marketplace? I mean, is that an option as we move through the year, or is it more spot-based from a perspective, particularly around memory? Just want to get a better sense for how we should think about kind of the dynamics in the marketplace.
It's a range, and so I don't want to get more specific than that. I mean, there are different
give us the names.
Levers that we can
Who
push,
else are you using?
and who knows how successful they'll be. But there's just a range of options.
Bro, that was the most basic trash answer I've ever heard in my life, bro.
Thank you, David.
What
Operator,
else are
could
you
we get
using
the
for
next
memory?
Question, please.
Can't all just be
We'll now be
SanDisk.
taking a question from Wame Mohan from Bank of America. Sorry for pronunciation.
That's fine. Thank you. Tim, on the services, you grew a pretty impressive 14%, and I know you said that the App Store was a record for the December quarter, but third-party data is showing a notable deceleration.
Guys,
in
we have
App
to
Store
rewatch
growth,
this, by the way.
Maybe 7% in the December quarter relative to your 14% growth. Was hoping if you could maybe confirm that, and secondarily, if it's correct, what might be some of the drivers of that, and what could be things that you could do to
Good
reverse
day, and welcome to the
that in
SanDisk
future
second
quarters?
quarter
And I have a
fiscal
follow-up.
2026
Hey, Wamsi, it's
earnings
Kevin
call.
here.
All
Oh, we got
participants
two
will be
earnings
in
calls
a
going. Okay,
listen-only
hold on.
mode. Should you need assistance, please signal a conference specialist by pressing.
All right, guys, we gotta like watch this. We're gonna listen to this one over. Let's see. Are they done? Are they done with this?
I would like to turn the conference back over to David for any closing remarks.
Okay. All right. So we just gotta listen to this afterwards. But this is gonna give us so much intel We gotta hurry. Okay, Apple, Tim, wrap this up, bro.
Those two. And so I think in general, we don't provide, the color at the detailed, services level.
Okay, thanks, Kevin. I
Thanks,
guess back
Kevin.
to the memory price. I appreciate you have a range of options to address that. Historically, Apple's not used a pricing lever unless FX markets got maybe very dislocated to prevent arbitrage or issues like that. But given some of these unprecedented moves in memory, would pricing be a lever that you would be willing to pull or push, and outside of every other thing that outside of everything else that you can do?
Yeah, I wouldn't want to speculate on that one.
Bro.
Okay, thanks, Tim.
Yeah.
Thanks, Wamsi. Operator, could we have
They're
the next
all trying to
question,
avoid
please?
the memory discussion.
We'll now go to Samik Chatterjee of JP Morgan. Please go ahead. Your line is open.
I remember that name.
Yep. Hi. Thanks for taking my questions. Maybe for the first one, I'm just looking at your capital investment in the first quarter, which did moderate from the last.
Guys, we need to be small cap demons. Garrett, I need you to show us your dashboard. Garrett, we need your dashboard of all of the companies you're looking at. Help us find the small cap baggers. All right? There's some stuff out there, Garrett, somewhere in your dashboard. Nimrods, how the heck you doing? You working right now, man? Hey, everybody's hustling. Yeah, Meta crushed it. We listened to, we reacted to that yesterday, but Meta crushed it. They crushed it.
We weren't going to provide any details on our, arrangement and collaboration with Google. Just speaking of CapEx in general, as you know, we have a hybrid, model for CapEx. And so I think that, what happens is our CapEx can be volatile, independent of kind of the volume of performance of our business. And as you know, our CapEx is made of several different line items that include tooling, our facilities, retail investments, investments in our retail store, data centers. And on tooling and data centers, we leverage this hybrid model that I mentioned before, which we leverage a combination of first and third party capacity. So in general, it's hard to read into the CapEx and draw any conclusions. And so I think I would just say there's going to be some ebbs and flows in CapEx. Last year, remember, we did build out our private cloud compute environment, and so we did have CapEx spending related to that in our results in December.
Got it. And my follow-up probably is for you again. You did mention product gross margin and the sort of drivers there for the product gross margin improvement. When you sort of highlighted mix as a driver, can you just sort of talk through what are the big differences in mix you're seeing for iPhone 17 versus 16? And did tariffs coming in more favorable play a role at all, and what you're expecting for tariffs for the next quarter?
Yeah, so there's a few things to unpack there. So on the overall margin on product side, I think I mentioned that we had favorable mix of products and leverage. I think given the strong iPhone cycle we're seeing, that was, I would say, probably a higher favorability than you might have seen in maybe other cycles. And as well, as you know, in Q1, typically we do see the impact of the cost structure of our new products that we launch. And in this case, we were seeing a more favorable offset from mix of products and leverage versus historical, sequential changes from Q4 to Q1. On the tariff piece, we had outlined a amount of $1.4 billion for the December quarter, and we landed roughly in that range, and at that level.
Thank you.
Awesome. Thank you, Samik. Operator, could we have the next question, please?
We'll now go to Krish Sankar of TD Cowen. Please go ahead.
Yeah, hi, thanks for taking my question. The first one I have for Tim. I think you touched upon this earlier on the Gemini integration and
Is it just
Apple
me or is
foundational
everybody
model.
Indian?
How to think about kind of like the difference between Apple
It's like an all Indian crowd, right? That's what it sounds like, doesn't it?
models, like, does the Apple foundational model evolve to a different layer in the AI software stack? Or how to think about it as you partner with third-party frontier models? I had a follow-up.
Yeah, Krish, you should think of it as a collaboration. And we'll obviously independently continue to do some of our own stuff, but you should think of what is going to power the personalized version of Siri is a collaboration with Google.
Got it. Awesome. And then a quick follow-up for maybe Kevin or Tim. Just, a lot of discussion on memory pricing. Given that the memory constraint or commodity scarcity is impacting both the smartphone and the PC markets, and Apple arguably having more purchasing power, do you think this is a chance for you to increase your market share both in iPhone and Mac at the expense of competition who might have more constraints in getting access to memory?
Yeah, I'd only want to talk about kind of what has happened. And we do believe, as I had shared, that iPhone gained share in the December quarter. And if you look at Mac for the full calendar year of 25, we also believe we gained share. And so we feel very good about our position.
Thanks, Tim.
Yeah.
Thank you, Krish. Operator, could we have the next question, please?
Operator.
When I go to Atif Malik, calling from Citi. Please go ahead.
He's dancing around all the memory and the Google
Hi,
questions.
thank you for taking my questions. The first one for Tim. Tim, some of the industry pundits
These are all Indians.
comparing the iPhone 17 upgrade cycle to the 2020, 2021 years as some of the iPhone 12, 13 users upgrade. Curious if you agree with that view, and also if you can layer on the impact from Apple Intelligence to the refresh rate.
I think each iPhone cycle has its own unique characteristics. And so I wouldn't compare it to a specific one. I think iPhone 17, the family of 17, is a unique product that brings several very compelling features in one product, and it has done extremely well. And so we feel quite good about it.
Yeah, Atif, I'll just add to Tim's comment that we talked about the fact we have a large and diverse install base of customers, and so this product has really resonated with multiple cohorts, whether you're on older devices or newer iPhones as well. So we've seen really strong reaction to the product lineup.
Great. As my follow-up, there was a lot of discussion on supply constraints, and I'm surprised that you guys are constrained on advanced packaging as you generally get your share at the big foundry. How long will these supply impact your ability to ship to true demand?
It's difficult to estimate demand when you haven't met the demand. And so we've obviously we have internal estimates on that, but I don't want to share those. But it's very difficult. And just to be clear, it's the advanced nodes that like 3 nanometer to be specific, where our SoCs are, the latest SoCs are produced on as to what is gating the Q2 supply. And it's a direct result of the 23% growth, and that far outstripping what we had internally estimated, and having more limited flexibility in the supply chain for some period of time. But I don't want to estimate when supply and demand will balance.
Bruh, just tell us who you're using. What other memory?
Very helpful, thanks.
All right, Thank you, Atif. Operator, could we have the next question, please?
Don't give us another question that's going to dance around
The
the
next
topic.
question will be coming from Aaron Rakers, calling from Wells Fargo. Please go ahead.
Yeah, thanks for taking a question.
I take my comment back, guys. It's not all Indians. It's a very diverse crowd. They have everyone here on the analyst call.
On the China demand, but I'm curious, you also called out India. And so can you maybe unpack some of the things that you're seeing in the Indian market, as far as iPhone traction, any kind of color on, what is a very large install base in India that seems to be a good growth opportunity for Apple still?
Yeah, thanks for the question. We did set a quarterly revenue record during the December quarter. And to go a little further down, we set quarterly revenue records on iPhone and Mac and iPad, and an all-time revenue record on services. So it was a terrific quarter in India. We really like what we see there. It's the second largest smartphone market in the world and the fourth largest PC market. So, and we still have, despite very nice growth history, we have modest share there. And so we think there's a huge opportunity for us there. And we could not be more excited about it. If you look at the other thing that I would point out is that the majority of customers that are buying iPhone and Mac and iPad and Watch are all new to that product. And so it speaks very well to opportunity there.
Who told us about
Yeah,
KLAC?
Aaron, I'd add you mentioned the install
told us
base. We're
KLAC,
seeing
right?
strong double-digit growth in the install base in India as well, which is really encouraging.
Yep. And then as a quick follow-up, kind of tied to memory, maybe not so much, but, part of this current generation, iPhone cycle is you clearly deepen some of your own internal silicon capabilities on the device.
Who pitched
I'm
KLAC?
curious if we
Boogie,
should
was
think
that
about
you?
that as a lever and maybe a supportive factor to gross margin that might be underappreciated. And
I agree with you, Garrett.
any thoughts on, where we go from here as far as continual opportunities of internalizing your own silicon? Thank you.
Yeah, I'll let Kevin talk about the gross margin, but in terms of the product, which is at the heart of what we think about in the user, Apple Silicon has just been a incredible game
Not
changer for us.
KLAC.
Starting with iPhone and then on iPad and of course the Mac
I know you
as
said
of
KLAC
a few
yesterday.
years ago. And so we believe it's a
Yeah.
game changer and a major competitive advantage.
Well, Edwin, they're doing
And as
fourth
far
quarter
as
and
impact
the
on
year.
gross margin, we have been,
Since
as
it's
you know,
like,
investing in core
full year
technologies like our
results.
own silicon, our own modem. And certainly while those do provide opportunities for cost savings and can be reflected in margins, they also importantly provide, the differentiation that's really important for our products as well. And
You guys down to play video games later? I'm kind of down, by the way. Just FYI, after we get work done.
is impacting, gross margin in a positive way.
Yep. Thank you.
Awesome. Thank you, Aaron. Operator, could we have our last question, please?
Certainly.
Boogie,
Our last question will be coming from Richard Kramer, calling from Arete Research.
your
Please go ahead.
KLAC missed earnings, bro.
Thanks very much. I have two questions. Tim, when you think about how Apple might manage AI, do you see that evolving towards more edge AI or on-device services versus cloud-based AI? And are you confident you've reserved sufficient data center capacity to support the widespread Siri adoption, especially given that you're not following the other hyperscalers and sharply increasing CapEx?
The answer is that we see both being important, the on-device and the private cloud compute. And so we don't see it as an either or, we see it as a both. And, and we believe it's
What's
a
your price target, Boogie?
differentiator because of our privacy approach.
We'll look into it together, though. We'll see
In
what happens.
terms of do we have enough capacity, it's hard to estimate with precision what the demand will be. But we've done the sort of the best job that we can do, and either have or are putting capacity in for it.
Okay, and you mentioned the 2.5 billion active device number, but Apple Intelligence features have only been available since the 15 Pro. So can you speak at all to roughly what portion of your iPhone or overall active device install base is now AI capable? And has this been a factor in maybe a more gradual pace of launching wider AI services?
Yeah, Richard, this is Kevin. We don't provide that specific number, but it is a growing number, as you can imagine, in our install base. And so we're encouraged by the amount of devices now
This
that
guy
are
sounds like a
capable.
stud.
But we're not going to provide a
he's
specific
locked.
figure on that today.
Okay, well, had to try. Thank you.
All right. Thank you, Richard.
Okay.
A replay of today's call will be available for 2 weeks on Apple Podcasts, as a webcast on apple.com/investor, and via telephone. The number for the telephone replay is 866-583-1035.
Tim, thank you so much, bro. Tim, I appreciate you taking the time for the call, Tim, and Richard, and all the guys and gals. I appreciate you guys. It was a good time.
Josh Rosen.
It was a good time. It was a good time. But hey, chat, what we doing? Chat, what we doing? All right, chat. I don't want to overwhelm us, but we got so much work to do. All right. Of course, Apple is just showing structural defensibility and continued smartphone domination, right? They're just crushing it there. Like that's just obvious. I wanted to listen in to get a little bit more indication of like what's happening with this whole supply chain constraints in memory. The only thing that I got from that is their second quarter gross margins are likely going to be compressed due to inflated memory prices. That's like the only like real thing that I could possibly think of. But Chat Capital, how we doing, y'all? How the heck we doing, Shred Lords? If you guys haven't voted already, vote in the poll on YouTube what you all think about Apple. Are you net buyers or sellers of Apple? This isn't a pitch for the portfolio, but I just want to get Chat Capital's consensus on whether or not we're bullish or bearish on Apple. And by the way, happy freaking Friday, Junior, Shred Lords. I hope everybody is literally having the most immaculate day of all time. Right? We're just looking at earnings. It's like, it's earnings season, y'all. So much going on in the world. Let's do a roll call for the Shred Lords. Let's do a roll call for the Shred Lords. How we doing, Nimrose? That's my nutritionist, dietitian, doctor. Edwin's got some really good new deals for us on the bin cleaning. Edwin, if you have anything you want to share for the chat, put it in the Discord, and I'll take a look at it. I'll take a look at it on the Discord. Garrett, my man, he is the resident quant expert, working on an amazing dashboard for the Shred Lords. Of course, we got A Boogie in the mix, Aaron, Richard, Falarin, all types of top dogs. How y'all doing, man? I hope everybody's doing immaculately well, and we're rocking and rolling and we're learning. So Apple was cool. Apple's a W. Let's see how they're doing post market. Up 1.3%. You're not going to see crazy swings in these big mega companies like this. Like this week was Mag 7 week, all the Magnificent 7 tech stocks. You're not going to see that much movement going on with those type of players, y'all. You're not going to see that much movement with them kind of players. I think what matters most is we understand SanDisk. And if I'm keeping it a buck, I think we should have AI do a summary. Just for efficiency purposes. I don't think we really need to like listen to the whole thing. We should download the transcript. Right? Let's go to SNDK. Earnings. Listen. Forms. Recorded. Where's the transcript? Like, if you guys ever miss an earnings, you can always go to the transcript. Let's be real about it. Is everybody having a W day? W day or what? Wait, so the companies that I want to dive into today, and like, I don't know how fun it would be, but like, I honestly, I could sit here and just read 10Ks all day, right? But like, what I want to read is Lamb Research. So Edwin, literally get off of Facebook, bro. Where are you getting your Facebook listings? Edwin, did we not learn from last time? Where are you getting these Facebook lists? You got Facebook Premium or something, bro? Bro, you got Facebook Premium or something? I've had Facebook my whole life, and I ain't never seen a business listing. How do you even find that, bro? I can't even find a Stream Deck. I can't even find a Elgato Light, man. How you finding businesses? They put you on the mogul Facebook. Oh, by the way, guys, my chief of staff runs my Facebook account. So if you ever want to follow Kenny Finance on Facebook, go ahead. But just giving you a heads up, it'll likely be the repurposed content from literally everything else. So, but what's actually nuts is on Facebook they had like 3.6 billion daily active users. 3.6 billion daily active users, right? Right? Yeah. It was 3.6 because it was like across their entire app. Yeah, 3.5 billion daily active users. Granted, WhatsApp's a huge number and Instagram is a huge number, but it's like, if I'm a content creator, I gotta pump out on Facebook, man. I gotta get on Facebook, dog. All right, so in terms of like things I want to get a read on, and we can just read the equity research reports. I think that's quicker. Lam Research, they do the testing. I forgot who said it yesterday, but we had another Shredload in the chat yesterday that pitched the stock. It was a good one. ASML, they had earnings yesterday. KLAC, this is Boogie's name. It could be a buying opportunity though. Keeping it a buck. For real. We need a more comprehensive calendar. Let's be real about it. We need like a really good comprehensive calendar. Cause like we're missing some of the. I didn't know SanDisk printed today. You know, cause it's not even on this list. And maybe because the market cap is small. Oh, maybe because I wasn't. Oh, my dumb butt. Oh. Chat, am I chalked? Chat, am I chalked? I should have been did that, right? I should have been did that. Hey, WK Von Music in the chat, yo. WK Von Music. He's looking to get out of it as another business is taking off. It's been cleaning? Oh, it's in a Discord? Okay. We'll look at that one. What's the priority of it? Is it like we should review it right now? Or is it like tomorrow type of thing? Because we can jump to privates. I'm just not, we're in a public bag right now. You guys want to stick on publics or do this quick deal review? Or it's up to you. Edwin, if this is like a live deal, we can look at it right now. But you know what? We're in the business of getting stuff done. Let's look at it right now. And then we got to jump to Publix, y'all. We got to jump to Publix. All right. Another one for 60,000. I think there's a limit on, by the way, I think there's a limit on Facebook Marketplace of what you can list a product at, by the way. Unless you guys have seen one that's like more. Like if you guys have seen something that's more expensive than 59,000, there might be a limit to Facebook. All right, let's look this one up. Bang, 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 bang. And if y'all ain't in the Discord, I don't know what the heck y'all doing. All right. Turnkey bin washing business. Listed 5 days ago. Used like new. Be your own boss. It has the lift. It's actually lifting up a real bin. Is it a franchise though? It might be a franchise. No, it's not, it doesn't seem like a franchise. It's just a trailer. Clean. It has a, oh, here we go. You see, the other one didn't even have a client list, remember? It has a 40 person client list. I like it. 2 pressure washers. Like the equipment value should be like, no, it's not growing 2,400 a month is what he said. I would get the financials, get the QuickBooks. Like something like this, you got to get access to the QuickBooks or bank statements. Ask for bank statements and QuickBooks access. So you can start doing some financial diligence on this. The only issue would be if, like for these businesses, the only thing that I would be concerned about is whether the HOAs and waste management businesses have like more larger institutional bin washing services, or if it's already embedded into like their contract with the neighborhood. So just be mindful of that. Oh, there's none out there? Oh, bro, you might have found you a clean one. Wait, Loki, Edwin, you're hustling, bro. I just thought about this. You've been finding and sourcing like multiple deals a day and public names. You're locked in, bro. You're actually locked in, bro. Stay locked, bro. I low-key love it. I love that energy, man. Heck yeah, bro. Let me know if you have what other financials do you have on this business though? If there's any other financials, I think that well, first and foremost, this doesn't feel like a scam. The other one definitely felt like a scam. You know what I'm saying? This one doesn't feel like a scam. This one feels more legit. So I would take a look at this one. Yeah, W. Edwin. Edwin is in his bag. Because he's found like 2 or 3 deals this week, and he's found some public names, and he's been listening in on earnings. Yo, he's locked. Note to the Shred Lord, stay locked, stay locked. We rocking and rolling, Shred Lords. But if there's any specific questions though, okay, so like diligence-wise, you want to track the age and useful life of all these pieces of equipment. Like there should be an inventory list that has the piece of equipment, the quantity, the date purchased, the age, the useful life, as well as like the utility that you may have going forward to see if any of these are out of order or you need to replace it. Because then you got to add that to the theoretical like cash needed to win. And so that's the first thing is like understanding that. The second thing is getting a map. Like you should get a map and a list of all the HOAs that they have to figure out what the different neighborhoods that they're working with to see whether or not if there's any overlap with potential competitors. And then thirdly, on the competitive dynamics, you need to have AI scrape all of the nearest bin cleaning businesses or waste management companies that offer a bin cleaning service in the near like 10, 20 mile radius, right? Next, you also want to understand team. Like you might just be buying the equipment, so you may have to do this yourself. And that's okay if you have you and your friends or family members or anyone that's down to help you with this, but you are going to be buying yourself a pretty big job with this. But granted, if it works, it could be clutch. The other thing too on diligence, check if this is spec'd to be able to manage a bunch of different types of bins. Granted, I think bins are now kind of universal, but if it is not, you might be limited to the bins that you can like lift up and clean with this system this way. So just check it out to make sure that like universally you can handle all bins in all different neighborhoods. You know what I'm saying? And then I would just start developing a very strong go-to-market approach. You need to make content about this daily. You need to do before and after content around the bins that you have before you clean it, after you clean it. You need to start passing out flyers and images of the before and after. Start paying for Facebook ads to blast to all of the homeowners in your specific area. Do some neighborhood promos where like you clean it all for free. And if they like it, you sign them up for a service. Revenue model for this, I would actually do a subscription model. I would have homes pay a monthly subscription for you to just come once a week or once a month to clean their things, depending on how many they want, and then have it, embedded with Stripe so you could just start getting your recurring revenue from that. And from there, I think you're chilling. You know what I'm saying? Oh, they had a subscription model? Oh, nice. See, I'm just thinking about this off the top of my head. I was thinking about buying Madden glasses to post my videos everywhere. Dude, heck yeah. Rip that. Rip that, brother. Heck yeah, dude. Let's rock, bro. Let's freaking rock. Hey, that's smart money moves. Hey, I know a lot of y'all hedge fund boys and girls in the chat, but y'all know we can buy private businesses too. Look, y'all gotta understand, the play is very simple. You build yourself a base of incredible recession-resilient private company cash flow. That then just starts to generate free cash flow yield. You move all of that into a public bucket where you can get crazy rips from sound good names. And then you have like the private cash cow, the market appreciating compounding engine of the public markets. And that's when you just have crazy, wild success. That's the vision, y'all. That's the vision, y'all. How the heck we doing, Shred Lords? How the heck we doing? All right, Edwin, I hope this helped, bro. I love this name. I hope that helped, bro. Ooh, they also wash AC condensers. You need to be marketing that. You need to be marketing that. You also need to be embedded into the Neighborly app. Or what is it called? Neighborhood app. This Nextdoor. You need to be in the Nextdoor app. This. Right? Like you need to be like an approved vendor on this and start joining the chats for the local neighborhoods. Or you can join low key as like a resident and then just start blasting your business. Or here's like a really good one. You get a relative or somebody that actually has a trash bin. Don't like fake this. Find someone that's like close to you. Have them join Nextdoor. Have them make a big post, or have a few people make a big post being like, OMG, with a picture. OMG, my trash bin is so dirty. They post a picture of their dirty trash bin in the Nextdoor app for your neighborhood or for your city. People are going to look at that, and since it has an image of a filthy trash can, they're going to be like, OMG, what is this? What happened? What happened? And some are going to be like, ew, I got one like that too. You then go in and say, hey, y'all, I just started a trash bin cleaning business. I'd love to help. And then you do it, and you reply back to that same thread in the Nextdoor app saying, or you have that person reply in the Nextdoor app, be like, OMG, thank you so much, Edwin. I really appreciate it. FYI, guys, this is what it looked like after he came. Right? This is what it looked like after he came. You're kind of finessing. You are cleaning his trash bin. You're just doing kind of like a user-generated content style play within the Nextdoor app. Hey, chat, we rocking and rolling, chat. We got ideas for days. Who got a business they trying to go? It costs you $0 besides a like and subscribe button. I love business so much. It's such a video game to me. It's literally such a video game. Oh my goodness. Gary, you did door-to-door sales? Turn me up, broski. Ooh, A-Dub. How the heck you doing, legend? First and foremost, good to see you again, bro. A-Dub. Seeking Alpha, they have a good one. Yeah, I like Seeking Alpha. They also have transcripts, but they charge you for it, bro. Don't they? My business might be my quantum dashboard. It is costing me nothing to build, but probably gonna wrap it in my current LLC called Armor Tech. Ooh, rip that, bro. What's Armor Tech? That sounds like a defense company. That sounds like a defense company. Woo! It's hot in here, ain't it? That's what happens when you get locked in. When you're with them shred. Whoa, hold on. Oh snap! Hold on, chat. Big news right now. Hold on. Oh, snap. Hold on, boys. Hold on, boys. This is urgent, but we're not gonna end stream because this is we're building in public. So, if you notice any additional gray hairs on my head, it is because we're closing a deal, ideally in a week, but it's SBA funded partly, and if the government shuts down, aka tomorrow, we don't get funding. So it's kind of like I haven't slept in days because I'm freaking out about this. But boys and girls, I don't know if it's legit. I got a text on it, but apparently we got one of the last slots for like SBA funding approval. It's like in order to do it before the government shuts down, you need a PIN number. Boys, they say we got the number. They say we got the PIN. Low key, we might be in there like swimwear, low key. Chat. W's in the chat for the pins. God looking out for us on this closing. We got the pin.
I need $1 billion. Let's be real about it. I mean, I don't really care about how you feel about it. I mean, I don't even really have a real hobby. It's not a real problem, and I still got it. I need $1 billion. Yeah, I've been in the lab, so I'm not when you see.
Can't see it, but It says, we got the number secured. They saying we got the number secured. I'm about to send them a text. Don't you play with me. You serious? For real? It's so funny. For this deal, I don't think these bankers, it's so funny. Like, these bankers and lenders have never dealt with someone this young, but also like this institutionally just like hardcore, but also this goofy. They're like mad confused. They're like, bro, why are you so chill, but then why are you also such a shred lord? All right, good. I literally told them, I was like, if you all prioritize my deal and get us this pin immediately, I would literally buy everybody in the office lunch. And they just text me, we want that lunch, bro. Hey, W, all right, I'll take you. Granted, we're going to Subway, but... Chad, how we doing? Shred Lords, we're making moves. All right, back to the public market, y'all. Hey, thank you guys so much. I appreciate y'all support. I really do appreciate y'all support. Like, I'm so locked on all this. The streams keep me locked. The streams keep me, like, motivated. You all are, like, insanely encouraging. And, like, it's insane. It's insane. So we out here rocking and rolling. So I appreciate all y'all support. So prayers up. We get this thing across the finish line. People don't understand like the real nitty gritty, man, of how intense it is to close this stuff, especially solo, and while trying to make content on the side. But if you don't focus on like the amount that you have to do, but instead you focus on the joy you have in doing it, and you like gamify it, that keeps you going, yo. Everything in my life is gamified right now. Like literally everything, right? Like the streams are gamified, right? It's kind of like the way how I view the live streams is kind of like everybody is playing a video game called Business Investing Smart Money Moves. But every day there's like a waiting room or a lobby that like everybody just like hangs out and mingles in before they go into their own specific like queued up matches. And like we all just get to chill and talk about resources and ideas for each other. You know what I'm saying? Like that's the way how I view the streams. This is like our lobby of just like shred lords that are just like, you know, catching up before we like go dominate our respective matches. You know what I'm saying? And then we all go into our individual games, our solo 1v1s, right? And like we're either tackling our jobs or our investments or buying businesses or growing existing businesses, or we're studying, or we're like trying to get into college, or like whatever your individual match is. But like every day we can all like hang out in the lobby. You know what I mean? And we can catch up and be like, oh, I heard about this, I heard about that, I saw this, I saw that. And like we're all helping each other. You know what I'm saying? So it's just like a super dope environment, you know? And like literally everything that I'm learning about and going through for this deal closing, I'm giving all of y'all like the exact same I'm giving y'all like the exact same play. And then keyword is dominate. That's facts. The keyword is dominate. I'm not here to do nothing else besides dominate, y'all. That's literally the only reason why I'm here. Like, that's literally the only reason why I'm here. You know what I'm saying? If I wanted to play it safe, I would have stayed in New York. You know what I'm saying? But I'm not here to play it safe, bro. Like, I got no responsibility. Well, I do got some responsibility. I got to take care of my family. But I got like literally like no real like immediate responsibilities. I got all this energy. I got all this time. I'm about to get as many freaking memory dividends as possible. I'm about to run this stuff up as fast as I can, and I'm about to risk it all. You know what I'm saying? Because what happens if I risk it all and it doesn't work out? I get to start back over with more learnings, more resources, more battle scars. You know what I'm saying? That's how we rocking and rolling, chat. I'll let you know how it goes. Y'all my board of directors. Hey, I love that. That is literally epic. That is like so cool that you think of it that way, Edwin, that we are your board of directors. And you all are my board of directors too, low key. Especially for Chat Capital. You're my investment committee. That's the name of the game, dude. We're literally here to dominate and own the entire chessboard. Like, literally, if there's money to be made somewhere, go get it. Go get it, right? Like, that is literally what we're here for. That is literally what we're here for. Let me show you guys a tweet that I saw, and I resonated with it. It was from this guy. What's his name? Chamath. Go get the money. He said something like, let me go. Let's see my bookmarks. He said something profound, and I was just like, yeah, this guy gets it. He gets it. This guy gets it. How do I see? Let me see if I found my likes. Found my likes. Like, yeah, you just gotta like go get the money. One of my friends sent me the penguin. Oh, that's so funny. That's so funny. We've been so locked in on this penguin, dudes. It's just like we're so locked in on this penguin, right? We're going against the grain. We're not going for safety. We're not going for safety here. You know what I'm saying? We are not going for safety. Let me see if I can find it. It's gotta be something here.
And you have a moral imperative.
Oh, here we go. Hey, listen up, y'all. I found it. All right, you guys ready? Let's listen. Share screen. Listen to what he says.
Do not money.
Granted, this guy kind of gives the vibe of like, he's very like, just, he doesn't care about anything besides money. Granted, I understand that. I used to be like that. But it's just like his advice to young people and folks that are kind of like playing it safe or like not wanting to put themselves out there, like it's really important. Listen to this.
Literally that simple. Get around, and then let's get around a table and let's create new rules. Literally that simple. Get the fucking money. I'm serious. Do not get it. It is going to be made. It is going to be allocated. And you have a moral imperative to make sure that if you have a point of view that matters and you want to reflect it, you get it.
Go get it.
I'm going to go get it. Other people are going to go get it. And then it will be about a competition of views.
Yeah. Edwin, case in point. Bro, someone's going to buy that bin cleaning business. Someone's going to clean the homeowners' bins in Texas. Literally someone, like homeowners are going to pay some type of dollars to clean their bins if it gets too dirty. It's just a fact. You might as well be the #1 solution to ever exist in your entire state. You know what I mean, bro? It's just like you literally might as well be the guy, right? Like you might as well, like, hear me when I say this. You might as well be the guy. If there's money to be spent from a customer, you might as well be the guy or the gal that offers the service or the product to generate that revenue. Like, why not you? You feel me? Like, why not you? If you have the equipment, if you have the energy to market, to go door to door, if you're able to unlock synergies, buy more pieces of equipment and scale, run it up, bro, until the wheels fall off. Like so many people just start by like giving it a shot and then they coast when it gets comfortable. No. Start and then go on an exponential run until things freaking break. Until you collapse or the business blows up, like one of those. Just run it, bro. Run it. You know what I'm saying? People talk about the penguin. Oh, he left to go chase the mountains. Did you see in that video, was the penguin walking towards the mountains? No. That mother effer was running, y'all. He was running towards the mountains. So run after, like when you set your sights on like a path, don't be dibbling and dabbling walking towards that, bro. Get the heck after it. Run towards it. You know what I'm saying? Get out there. Y'all got me in my motivational bag. Let's lock back in on these earnings. So, SanDisk, Lamb, ASML, KLAC. We need SanDisk. Where's SanDisk? Okay. SanDisk, Lamb. Sprint, fall, rebuild, better, repeat. Hey, Garrett, I rock with you. Because my stuff can sound very unstructured and just pull off a fear octane and caffeine. And then Garrett comes in and he polishes it into a very nice philosophical tweet. Sprint, fall, rebuild, better, repeat. Richard, what the heck you doing, Shredlord? How you been, man? What up, Mr. Happy Trims? Hey, y'all, Richard owns a pet trimming business in Texas, or pet grooming business in Texas. One of the best in the world, and our goal is to get into $1 million of sales. How you doing on that? How the heck we doing on that? Wait, also, for the rest of you guys, like, how you doing on your goals, by the way? Oh, yeah, by the way, Cool Webby. Hi. How you doing, Legend? I just saw your name. I forgot. Dubs, thank you, man. Boogie says, can Gemini make a Google Calendar for the watch list? Gemini can do everything. I just connected it all, bro. Boogie. My entire AI suite is insane this year. Literally insane. AI can do everything. Literally everything. You're headed home now. It's a little early, isn't it, Richard? Just kidding. JK. I'm kidding, Richard. I'm kidding. Talk about headed home now. Talk about headed home. Hey, man. Make the office your home, bro. Make the office your home. Hey, sleep at the pet room and shop until you hit $1 million in sales. I'm kidding. Oh, I'm kind of not. I'm kind of extra, guys. I'm kind of extra. Like, thank God I don't have like a physical business with an office. I would live there. Like, if I had an office, like say Chat Capital had like an actual office, I literally would like, this is what I would do. I would have like the main office, and then I would have like my personal office. But then my personal office, I would have like, I would have it designed to be office/content studio, and then have a couch in the back for the content studio for the aesthetic. And then, but that couch has a pull-out bed. That's what I would do just to save money on rent. And I would literally just stay there. Granted, when I have a wife and kids, they're going to be like, that's not going to fly, brother. So I might as well get that kind of, savage lifestyle out while I can, while I'm young. You know what I mean? Because I don't need much. My friend, actually, funny enough, it was Kayvon. So Kayvon, we're such shredlords, and like we spent Christmas together because we were both just locked in this year. It was kind of lonely, but it was good to be with your boy. We made it festive by like going to see Christmas trees and all that. But outside of that, we literally just cranked for like 2 weeks straight. So Kayvon was here. He slept literally. I had my air mattress right here, but he was like bringing it up that like, bro, as long as we have a phone, a laptop, Wi-Fi, a backpack, an air mattress, and access to water and food, bro, we could live. We could survive. Like, breaking it down to like its most simple fundamental level, as long as we have a phone, a laptop, air mattress, and a backpack of like 2 or 3 days of clothes, we actually could survive and just freaking build. You know? Isn't that insane? I know it sounds mad depressing. But like when you're young and you're just trying to get it, that's all that matters. You know what I'm saying? You know what I think? I think people mess up with this. I think people mess up with like, I think people often mess up by simply like, wait, this is actually bugging me. Hold on, guys. Let me make you something. Because I realized that you can't like see the chat when it's like that. Let's add you a little background. Does anybody know how to change the background on a thing like that? Let me see. Here, I'm gonna make some. I'm gonna make some for the Shredlords. I've gotten so good at graphic design. By the way, have you guys been liking my thumbnails? Yes or no? Be honest. Maybe you can add a black stroke. Okay, let me try this. Hold on, let me try this. I wonder if it looks, I think it'll look better with black. We'll make it have black. Here we go. Give me 1 sec. Boom. 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 Move this to the downloads. Toss this in the OBS folder. Documents, downloads. Put this desktop, OBS. There we go. Black BG for chat. And then we're going to add this. Ooh, okay. Watch how I do this. Let me cook this up. So we add here. You add image. And then we're going to call this BG or Chizat. Upload. Boom, boom. And then, but it like covers my face. That's the only bad thing about it. But, and you can just add it here. Boom. All right, so you guys can read it, but just makes it look weird. Let's move you. Let's make your chat box. Chat don't need to be that big anyway. Y'all out here get y'all spoiled with this real estate on my screen. Y'all out here be spoiled with this real estate on my screen. Thumbnail's getting better. Hey, W. Wait, okay. You guys see? You guys can read the chat now? Can you read the chat now? Calling all Shred Lords. Can you read the chat? It's a W or what? Boom, 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 boom. How's that look? That's a vibe? Can you guys read that, or is it too small? It's W? All right, nice. W's, W. Hey, you guys used to watch WWE? Okay, wait. So, this is what I'm saying. So, when it comes to freaking building something. Yeah. Thank you, Garrett. I appreciate that, y'all. All right, so when it comes to like building something, like I think where folks screw up is that I think, and this is, I don't want to be offensive to anybody, but I don't care anymore. Like when it comes to like building things, I think where folks slip up is that they don't put all their eggs in the basket. You know what I'm saying? Like what gets very, very dangerous if you have the mindset of a builder or like someone that just wants to pursue greatness is the worst thing that can happen is you don't burn the boats. You know what I'm saying? Like you play it safe because you like haphazardly pursue your dreams while also entertaining different backup plans. It's like, no, it's like we live in a very competitive marketplace to where like 10 times out of 10, if you have a goal in life, but you give that goal 25%, there is literally somebody out there in this world that is giving that exact same goal 100%. And they're going to win 10 times out of 10. Or when things get difficult and you start to make excuses for why you can't make progress on something, there is somebody else that does not take an excuse as an answer. Like they don't believe in the concept of an excuse. Like they don't believe in the concept of inaction. You know what I'm saying? I said this on stream all the time, but it's just like the two biggest curses to a builder is like distraction and inaction. And I'll die on that hill. You know what I'm saying? That like the worst things that could ever happen is that you're distracted by somebody that doesn't understand your motion. You know what I'm saying? Like that's like one of the worst things that could happen is somebody distracts you from it. Or someone is like, or like the internal dialogue is that just like, this song sucks. Back to this one. Right, I say this all the time, but like the two biggest curses is like distraction and inaction. And on the distraction point, it's just like being around folks that just don't get it. That's very dangerous. And then the inaction is like the internal thoughts you have with yourself around why you can't make progress on something today. You know what I'm saying? So, like, I think a really good practice for like a little small, like a really good small habit for a builder is if you have a goal to build something, figure out what that timeline is in 12 months to achieve that goal, and then force yourself using AI to develop an actionable timeline to get it done in 10 days. It sounds insane, but it kind of works to help you like identify what's essential and non-essential. Did you guys hear me when I said that? Did that make sense? Like if you have a goal that you want to achieve, outline what it looks like to achieve it in 1 year, and then force yourself to think through, if you had all the resources, the tools, and everything available to you, how would you achieve that exact same goal in 10 days? Like that's like a epic, aggressive playbook, which I think works. And that's something that's like, dig into that. You know what I'm saying? Like, why not? Because if you force function to, like if you force yourself to just like have as much sense of like as much of a sense of urgency on what you want to achieve, that's critical. Edwin, what's listen to Ben Broke? Have y'all listened to Ben Broke? Is that a person? Who's it by? Can I listen to it on stream? Is it copyright? Oh, it's a song. I probably can't listen to it on stream, right? Oh, it's got Fat and 2 Chainz and Chamillionaire. What y'all know about Chamillionaire? They see me rolling. They hate it. You know what I'm saying? Bro, Garrett, I bro, that's exactly how we operate, bro. If you set insanely ambitious high goals and you like pursue it 100%, 150% actually, you're going to be like 3 to 5 times better off than people that set a very mediocre goal. I'll keep it a buck. This community, Chat Capital, our Discord, we have literally no room for mediocrity. We have no room for mediocrity in anything. Like, I don't care what you're doing. If you're trying to ace a calculus test, you got to give it your all. You got to go crazy. If you want to buy a business, bro, you just can't sleep till you get the deal done. You know what I'm saying? If you're trying to build a dashboard tracker for all of your businesses, for your quant ecosystem, bro, if there's a list that you can tangibly get done, just get it done. Be obsessed over it. You know, nothing else matters until it's done. You know what I mean? Y'all want to see something? I've been on a roll with this being locked in. It's kind of like a mental hack. It's like a mental hack that I've been like training myself to just like because like, bro, I got a lot of distractions. My family's a huge distraction. My friends are a huge distraction. Because not everyone gets it. So it can be very difficult to like be in this season with someone that just doesn't get it, you know? So I've been like intentionally avoidant and cold around people that just like aren't in the same motion as me, just for this season. Like I'll see them literally when I'm normal again. You know what I mean? Let me see. And it was like a Conor McGregor clip that had me rolling, y'all.
The Hollywood Walk of
Here we go.
I am a man with something to prove.
All the stars are here, look.
Oh, no way. The walk, what's it called? The Walk of Fame?
Hollywood Walk of Fame.
Hollywood Walk of Fame, nice. I couldn't give a fuck about the Hollywood Walk of Fame, yeah? But don't let them confuse the fact that I outwalk everybody. And that when the time comes, when the door shuts, when the bell rings, nobody does it better than me. Nobody is more calm than me. I'm able to calm my mind. I swear to God I can go all day long, yeah? All fucking day long I'll go.
He's so loud.
To get to the pinnacle, it needs to be like that. It was isolation, it was visualization, it was motivation, and it was dedication. There was nothing else going on in my life, you know what I mean?
That was so fire.
All the stars are here, look.
That was so fire. But it's real though, you know what I'm saying? It's like, bro, I be getting messages sometimes and it's just like, people are just like, OMG, did you see what they said on Real Housewives of Dallas, right? Or like, OMG, bro, did you see the trade announcement for Boom Boom Team? And like, I could give 2 F words about that, bro. It's like, I don't care, you know? Like, I really just don't care. You know, I'm very proud to admit that I have no life right now. Like, I am very proud to admit that I have no life, that I've made my holding company, and my content, and my faith, my life. Like, it's like, those are the only three things that matter at all. I don't care how you're doing. I don't care how, like I don't care what you've been up to. Like, I don't care. I really don't care, respectfully, you know? Because, like, me allocating mental capacity to anything like that is taking away mental capacity to making informed investment decisions or ideating incredible stories for YouTube and live streams, or me praying and getting closer to God. Those are the only three things that matter for me to have the next 80 years of my life be an absolute run. Especially in this season. Bro, Edwin, that is spot on. If it doesn't change my family's life, I don't want it. And bros, let me keep it a buck. Let me keep it a buck with y'all. You got to understand that even family won't understand your grind. Like, out of everyone in my entire network, the ones that don't get it the most is actually my family. And it's the worst thing in the entire, like, they just really don't get it. You know? Like, they have no sense of sacrifice, you know? So it's just like, I have to force myself to just, like, love them from a distance because they're a distraction if they don't understand this mission. You know, I literally told all my boys, right, that, like, we are on a rocket ship. On a rocket ship. And boarding has closed. Whoever's on is on. You know what I'm saying? Whoever is on is on. You know what I mean? Like, that is it. There's no new people, no new friends, right? Chat Capital, whoever's in here, like, this is the rocket ship that's going to the moon. You know? Newcomers, they gotta wait to the next ship. 2057. You know what I'm saying? We're moving different, dudes. And I say that just to, like, be as transparent as I can with, like, this is what it takes. You know, this is not a live streaming community where, like, you get to see me freaking day trade a dumb chart all day. That's not happening here. It'll never happen, right? Like, this isn't the community where we build a drop shipping product. No, like, this is the community where we literally, via OBS, strive to build a $1 billion empire in public. And you get to see step by step the good days, the bad days, the wins, the losses, right? Like, all that, the diligence, like, everything, you know what I mean? And you just get to see, like, for the few hours that we're on stream, like, how locked in I am and what it truly takes. You know what I'm saying? Like, that's how we roll, dog. That was the thesis. That's the point. Why? Because when it gets to the point where, like, my little spoiled kids are just out here chilling in Lake Como during the school year, and they want to understand what it took to build this life that Papa Kenny Finance built for them, I'm gonna tell them go to January 2026. Go study how your daddy was moving. All right, go to the live streams on YouTube in January 2026, February 2026. Go. I want you all, before you even get an allowance, I want you to watch every single live stream of 2026 to see the community that your dad had when he literally built his dreams. I want you to read the chats. I want you to see how motivated these cats were, you know? Just so that they can get it. I want to document a life of what it means to have that dog in you. You know what I'm saying, chat? Like, that's the mission. That's the motto here. You know what I'm saying? And we got Rich Topic out here leading the way out here. Yeah, Rich Topic is literally, every time we're on stream, Rich is out there making smart money moves and hustling, and he's got us in there in the background, keeping him motivated. Rich Topic don't even listen to music no more. He just listens to our streams. I love that. You got to use that trust fund as leverage to motivate the youngest to follow your path. That's facts. Hey, and this is the stream for everybody. You can be a trust fund baby. You can be a Section 8 poor kid, right? If you got a vision and you got the capacity to hustle, welcome. If not, go watch Brain Rot. You know what I'm saying? So now that we're on to that topic, chat, let's get smarter, shall we? Let's get smarter, shall we? I love that Nimrose calls it. It's called It's fully locked in at all times. It's essential. And then Garrett, that is a bar. I just have this weird obsession with making numbers grow. Wait, Garrett, actually, that is so freaking sick, bro. I have this weird obsession of making numbers grow. I love that. That is absolutely epic. I'm taking a picture of that. I have this weird obsession of making numbers grow. That is so dope, bro. Let's freaking rock, man. Let's freaking rock, bro. Y'all out here. Y'all really keep me going, Shred Lords. We making smart money moves. We get into it. And it's just like, if anyone ever comes to me and they're like, OMG, I just feel so alone and no one grinds like how I do. I'm like, that's completely your fault. My live streams are public and they're free. Like, if anyone joins our live streams, they feel the aura of just how locked everybody is in here and how we talk and how we build and how we move. It was your fault if you haven't clicked in here. I should low-key make it like a little private thing and make it paid, but make all of you guys like free access. Low-key, we should do that and make it exclusive for the dogs only. All right. So we gotta be efficient by using AI to help us get smarter on what the heck happened, right? Because this right here, this is a mission critical pieces of intel. We need to understand this. We also want to get the transcript of SanDisk. So let's go to SanDisk, earnings transcript. Let's try to pull up what we can get here from investing.com. Yeah. Okay, I see they all want us to make a free account. This, and this. All right, give us a little transcript. Give us a transcript. 2 hours ago, we need that. Yeah. All right. Ooh, okay. Now, Gemini, you locked? You ready? All right. I want you to... Here we go. So we happen on early tomorrow for earnings? Wait, what's tomorrow? Is it Chevron tomorrow? Chevron tomorrow, right? That's a really big thing just to hear how the... Because if Chevron does well, I think the broader economy is going to do well. Same with Apple. All of the tech signals have showcased it good. What time is it? If it's super early, Eastern time, because I have a bunch of closing meetings tomorrow morning. Let me see. Oh, so it's 8 a.m. Eastern or Pacific. Dang. Or 8 or 9 Pacific. I might have a meeting then. If not, tomorrow's stream, that's the first thing that we'll touch on is the recap of it. But regardless, you should still dial into it. I don't know. I got to check and see. Oh, here, I'll show you the link. Oh, if you want Chevron earnings call. You go here, and then this here, and then you gotta like actually call into it. Yeah, you actually gotta like call into it. They're very old school, but you call into it, and then you put in this code, and it'll be like a listen only like earnings conversation. But they also will have this webcast that you register for. It's not like sensitive things. It's just like you just put your email in here, and then it'll give you a link to have like a listen only webcast just like this, that it'll just like start playing live. So I'll put these in the chat for you, Edwin. This and this. But tomorrow afternoon, our chat will be our stream. We'll talk about Chevron. And then I might low-key want to get a little Arc Raiders in tomorrow. Y'all keep preventing me from playing Arc Raiders. But we're allowed for it. You're doing a good job at blending the entertainment personality type streaming with the financial insights. Thank you so much. I love that. Thank you so much. That's like a goal, objective is to like bring personality to finance. Edwin, do you have a big position in Chevron? Are you a shareholder? Are you a shareholder? One of my friends has an obsession with like asking random people that work at big publicly traded companies if they're shareholders. Like an Uber driver. Do you own shares? You know what I'm saying? That's so epic. That's so epic. All right, so that's Chevron. Boom, boom, boom. Now, transcript. So Gemini, lock in. All right. I want you to act as if you're a long, short equity hedge fund investor from Tiger Global and other Tiger Cubs, professional with expertise in the AI supply chain, i.e. memory, semis, etc. I want you to review the following earnings call transcript to identify the key takeaways as well as the important commentary from the CEO, CFO, and Q&A about the current state of the memory bottleneck choke point. The premise is memory stocks have been on a run, and I want to see what's around the corner. This is important here. Like that emphasis in the prompt of like what's around the corner. This is really, really, really important here. Guys, I actually never used the Notebook LLM. I actually don't know how to use it. Well, I've never even clicked into it, so it's probably easy to use. But like, what would be a use case for it? What do you guys think would be a use case? I think it could be a good use case to just like document and log all the learnings post earnings of every single sector and stock that we look at, so that like Chat Capital LLM can just like always be top of mind around identifying the patterns more and better and more efficiently. But let me know if you guys agree on that. Like, I know Chris in the chat, he mentioned one time that I should be doing that Notebook LLM stuff to learn things, but I'm not that familiar with like how to actually execute on that. I would love to learn though, if anyone's an expert. And Garrett, you might have some really good like AI and tech tools that can just help make my investment diligence and sourcing and analysis process a lot better. So feed the streets, Garrett. All right. Don't want surface level highlights or recaps of earnings. I want needle moving updates underlying narrative confirming or concerning points for the stock. We telling Gemini to lock in. We're telling Gemini to lock in. All right, here we go, y'all. All right. Oops. Okay. But Gemini, come on now. Let's print this then. You want it? I'll print it for you. Okay. Here you go, Gemini. Oops, let's just go to broader Gemini. Whoa. Boom. Okay. Upload files. What they got going on? Let's see what they got going on, y'all. AI is literally insane. You mean the owners this weekend? Owners of the wait, you mean the owners of the bin cleaning business? What owners are you meeting, Edwin? Oh snap, bro! You are not messing around. Heck yeah! Hey, good luck on that management meeting. Actually, tomorrow remind me. I'll help you put together like an agenda of like key topics you should definitely ask or like key questions for your management meeting. Gustavo, what's up, legend? How the heck you doing, man? Happy Friday, Junior, dog. Hope you're having a great day, Gustavo. I'm catching you up. So we already had a conversation with we spoke to Tim Cook earlier today. We heard that Apple earnings have crushed it. So my guy Tim is doing well. Outside of that, we kind of screwed up because it's also SanDisk earnings day, and they crushed it, and they're up a lot. But that's honestly the most important needle moving earnings right now, like SanDisk. Like they're one of the top memory players. Some of the other memory folks are gonna be releasing earnings, but like that's the stock that was up 1,000+% last year. I'm trying to see if it's going on another run. Like that was really important. So we just downloaded the transcript of like the entire announcements and Q&A, and we trained our AI to just like think like a deep value oriented investor to give us a little bit of insights around like what's around the corner for the earnings. So let's talk about SanDisk. All right. The key needle moving update is that the memory bottleneck is no longer just a cyclical supply and demand mismatch. It is being institutionalized through a fundamental change in how NAND is sold and valued. Ooh, okay. Moving beyond the transactional cycle. Management is aggressively pushing a narrative that NAND is becoming a durable, structurally attractive industry. Okay. Death of quarterly negotiations. Management is actively pivoting away from quarterly price bickering towards multi-year agreements. That's really important. The only issue is like what we heard. You see how we're bringing patterns? By the way, this is good. I'm about to cook. But you see how we're bringing in patterns of like what we're hearing in SanDisk's positioning. They're trying to go from like quarterly pricing of their memory units to more long-term multi-year agreements, right? To have consistent supply and pricing. But as Apple just said, they are trying to weigh their options when it comes to the memory constraint, right? So Apple would never want to go for something like this, but they might have to, and it's even better for SanDisk, right? All right, and all of this, it might sound consensus-wise that like, oh, it's great and just all bullish for the name, but you got to keep in mind that the stock is insanely expensive right now. Insanely expensive. So like the dimension of, there's three realities of a stock, right? Like you guys got you lock in on this. Like there's three realities of a stock. There's what the business is doing operationally. There's what the customers are willing to purchase and buy today and tomorrow. And then there's a reflection of all that available information into what the current price is trading at. You need to understand all three to have a strong conviction of whether or not you want to buy it. Like that is hyper important. Like SanDisk right now, operationally, they're building and investing more capacity to launch out and sell more units. The customers are facing a severe shortage and they just want access to more consistent supply. But then the price, the issue is the price is very much reflecting an insanely potentially overvalued stock right now. So am I buying? I don't know. You guys let me know in the comments. But like that's how you have to marry those kind of concepts. Does that make sense for you guys? It's not just about, oh, are they selling more iPhones? It's about, do they have the potential to produce a lot of iPhones in a cost-effective manner? Is the demand for iPhones going to continue to be consistent? But then does the current price reflect that bullish sentiment in iPhone unit production and sales appreciation, right? Like all of this could sound really great, but if the price is just way too high right now, you're shooting yourself in the foot if one thing goes wrong. If one thing goes wrong, like we don't want that to happen, y'all. We definitely don't want that to happen. We definitely don't want that to happen. All right. Death of quarterly negotiations, allocation as a weapon. SNDK is prioritizing strategic customers who sign these multi-year frameworks over those providing transactional short-term demand signals. I like that. If you want supply, you must lock in long-term returns for the manufacturer. That's good. That's good. I think more folks are going to pivot to that as well. That makes a lot of sense. Do you think Micron is under or overvalued? I think one of the folks within this segment that might be undervalued is Intel. Just given that huge price decline post earnings. But I think Intel has a natural floor, right? I think Intel has a natural floor of like how bad it could be because of the NVIDIA and government integration and like the blue chip US manufacturing thesis. But I don't know. What do y'all think? And how do you guys think of like PE ratios and stuff? I never really been one to like consider it that much. I'm more of like an EV EBITDA type of thing. But that's because like I have private background. Public market, it might be a little different. Like for the public market heads out there, like, can you guys teach me like what's the best public market things to like look at besides just like underlying return on equity across businesses and sectors and stuff? If I wasn't scared of the cyclicality of RAM, I would be dumping into Micron. Cyclicality in terms of just like eventually we're gonna like overproduce inventory and it's just not gonna sell. Or what do you think? Like I really don't know. Like I'm so it's the most confusing thing right now. It's like, is this an obvious dump it all in there? Or is it kind of just like have some balls and allocate like 1% of the portfolio to it? You know? My only issue is that there's so many memory stocks. The demand for this is like, I said this yesterday, didn't I? But like, eventually, like, memory does have a point where it's like you're kind of set for your current needs. You know, like you know how you have like this really good example. This is a Samsung SSD, right? For all my videos and stuff, for my computer and my laptop, portable SSD. I only needed to buy one of these, and I bought it 6 years ago. You know, and even though the demand of what I've used has like evolved, my use cases for memory has been this and Google's cloud storage and things like that. But I'm not buying it like every month. Like what these memory folks make the narrative seem is as if like consumers and industrial customers and data centers and AI hyperscalers are buying this like every single month. Eventually they're going to have enough storage. But then also eventually they're going to get smarter of how to like right size and just like downsize old useless memory. Like, do you guys know what's causing a lot of the memory shortage? What's causing a lot of the memory shortage is like little things like this, where it's like these like goofy AI things like this. Like the weird dumb things like this that's like eating up a lot of AI, you know? Eventually they're going to find a way to like right size and get rid of that and just free up memory. Like it's kind of like one of those things where it's just like, you go in your iPhone setting and you just like clear dumb storage. You know what I'm saying? I think there's going to reach a point where it's like, I think operators and folks are going to understand how to better utilize their AI generation capacity, right? And how to better allocate memory needs to it, you know? Because like here's a flow of events. Here's a flow of events. The social medias, the hyperscalers, their feeds, or AKA the capacity of all available pieces of content, it's being flooded with AI slop. That eventually is going to hit a breaking point that causes users to churn because they're sick of seeing AI slop. If that happens, they're going to be forced to figure out how to remove AI slop, prevent AI slop, and that then is going to cause a reversal in like the clear demand for AI storage allocated to AI slop, right? And eventually you're going to have enough, and it's just like consumers are going to return back once it's like a normal, better feed. And they're going to realize that like, all right, we're kind of set for like the next 6 to 12 months. And the clear issue with this sector specifically, memory, is that they're pricing in demand that makes it seem as if for years, 5+ years, I think. I just brought that number out of my head. But like for a long-term period, they have insanely high, crazy mega demand quarterly. But one bad signal from any of the hyperscalers, data center customers, enterprise, industrial customers, one bad signal that they say we are good for a quarter, we actually have enough for the short term, that sends those things boom. Because then there's going to be a market disconnect. Just like Gustavo said, there's going to be a market disconnect to where memory stocks are saying that we're producing more capacity, opening new facilities to pump out more units. But then on the demand side, they're saying we realize that we have enough. That disconnect is going to send this stuff chalked. Absolutely chalked. Now, the key is that like we can't wait for earnings to get these updates, y'all. I'm keeping it a buck. Like we're being very reactive as investors right now. Like if Chat Capital were a hedge fund, which Feds is not, right? If Chat Capital were a hedge fund, we'd be very reactive right now. And that's not how you play ball. We got to be going to all of the memory conferences. We need to be on LinkedIn hitting up all these memory producers. We need to be like calling hyperscaler customers, data center customers, and asking them what is their appetite for memory demand right now. Little things like that. Like what I used to use at KKR is this company called Tegas. And it allows for you to have calls with customers or look up transcripts, little things like that. Does anybody know Tegas? We should get a brand deal from them. Tegas, if you're listening, hit me up. brands@kennyfinance.com, twin. That actually would be a really smart play. But Tegas has earnings call transcripts, and we got to understand like what's happening with we got to understand what's happening with it. And then okay, hold on. But let's get back to SanDisk. So, I just got a text. One of my team members is sick. Oh, Anna. Sorry, Anna. Hope you feel better. Also, guys, even though you're ambitious and locked in and getting a lot of things done, don't be a butthead to your team. All right, they're normal humans. You know what I'm saying? So, if anybody out here manages teams or people or employees, don't let your hyper over ambition spill into your relationships with them. Recognize that they're human, and if they don't have equity in your business, don't expect them to perform like you. You know what I'm saying? Like, that's what you got to understand. Like if they don't have equity in your business, don't expect them to go hard like how you do. So that's like a leadership 101 thing, chat. Leadership 101. But create a safe space for your employees to feel encouraged to work hard. All right. AI inference bottleneck. Data center as the new dominant force. Data center flip. For the first time, data center expected to become the largest market for NAND inference driving content. Management noted that AI inference in particular is driving a meaningful increase in NAND content per deployment. Narrative as models move from training to deployment, the storage choke point shifts to the edge in inference. Ooh, okay, so that's really important. Right now, a lot of like enterprise folks are using the current memory capacity just to train things. And of course, that eats up a lot of storage. But then once it's already trained and you got to deploy, then it's like the real-time flood of data and information. And that stuff's massive. That stuff is massive. Right? Stuff is really massive. Data center exabyte growth forecast for 2026 have been revised from the mid 40 to high 60. Around the corner, supply discipline versus demand insanity. Okay. So this is key. AI won't really be able to like use this and do this, but it's useful in thinking about the different ideas. But what you want to do is start, when you get all this information, it's good to understand it and summarize it, but it's also important to like piece the patterns together to understand like what's around the corner, like what's now going to happen, you know? Let's see what AI thinks is. CapEx. Despite unprecedented price rebounds and demand being well above supply, SNDK is not changing its capital spending plans. Okay. Artificial scarcity. Management stated that any material increase in capital deployment will require high confidence and financial commitments over a several-year horizon. Meaning that like if they want to build more facilities and capacity potential, then it's like they want to make sure that they want to have pre-booked revenue for that. Big SA transition. Primary engine for margin expansion. I don't know about this one. This is my first time hearing about this type of tool or node. It's so weird that they have all these nodes. All right. Financial needle movers. Gross margin reset. 65 to 67. Up from 52 or 51. EPS. I don't like this. Dive deeper. This is too surface level. Yeah. Here it says, in cloud memory segments, they eventually went from offering generous storage to paid storage. That will eventually happen with AI eventually. The free use of memory is basically a lead magnet for now. Yeah, I agree, bro. I agree. I completely agree with you. Okay. So the most significant data point is the rapid revision of demand forecast. And then the data center segment, 3 months ago, 20% growth. Last quarter, mid 40% growth. And the current view is going to be high 60% growth. Okay. Okay. Management is, by the way, I'm very bullish on data centers. I think it's really essential for everything that we have. And like how I'm exposed to the data center play is for this business that I'm acquiring on the surveying and civil engineering side, I am doing everything in my entire power. And if anyone has resources with this, I'd appreciate that. But I'm doing everything in my power to pivot some of our work to go from traditional residential and industrial development to data center development. Like if we can sign some data center build out civil engineering and surveying contracts or like digital twinning contracts, that would be massive for this business. That would like double or triple the size of the company in like 6 to 12 months. But then after that, all that money, I'm putting it into SNDK. Just kidding, not that. But I'm playing in the public markets with it. But that's like a key play on the services side, right? Because they're gonna build these things, and if they're gonna build these things, you need an engineer, a surveyor, and a digital twin, and all that type of stuff. You know, so and how I tactically do that is I have conversations with like how I tactically do that is I have conversations with developers that specialize in the data center segment, private equity investors that own data centers, little things like that. Because we are rocking and we are rolling. Chat, I gotta use the restroom real quick. I will be back in 40 seconds, but I'll play you a little bit of Kayvon in the interim. I'll be right back. BRB. But while we're doing this, I'm gonna let you guys read the key takeaways from Goldman. All right. People have to pay thousands of dollars a month for this. We got it for free. All right. So read this SNDK one.
Let's be real about it. I mean, I don't really
I'll be right back, chat.
how you feel about it. I mean, I don't even really have a real hobby. That's not a real problem. And I still got it. I need $1 billion. Let's be real about it. I mean, I don't really care about how you feel about it. I mean, I don't even really have a real hobby. It's not a real problem. And I still got it. I need $1 billion. Yeah, I've been in the lab, so I'm not one you see around. Thinking about my goals, so I'm not fun to be around. Now I want the whole field. Ain't no bush to beat around. I take it to the sky, so I don't ever see the ground. Wild call by, you can say I'm in the hunt now. Living out my fantasy, they love it when I touch down. Flyer than a plane or a pelican, I'm up now. Money, true holiday, I'm playing for the Bucks now. I'm out in BK, Steve Nash. I don't see much, man, I only see cash. You can't be mad, you need to relax. And my favorite drug is hustle, I'm about to relapse. I'm getting all this money just from making these apps. Hope they take care of my hood when I'm paying each tax. I'm managing my waist, so they saying he's trash. But they look me up on Google, they be keeping these tabs. Let's be real about it. I mean, I don't really care about how you feel about it. I mean, I don't even really have a real hobby. That's not a real problem. And I still got it.
Chat, we
$1 billion.
Oh, snap. Oh, snap.
I mean, I don't really care about how you feel about it. I mean, I don't
What are we talking about? Chat, what y'all learned about Fasandiz? What y'all learned so far, huh?
and I still got it. I need $1 billion. Yeah, my balls are infinite,
Oh yeah, it was quiet. It was like the background talking one. I can turn it up.
I should call your mom like I
turn it
love
up,
your
man.
chicken dish.
Hold on, let me play from the start.
Let's be real about it.
It's my favorite song.
I mean, I don't really care about how you feel about it. I mean, I don't even really have a real hobby. That's not a real problem, and I still got it. I need $1 billion. Let's be real about it. I mean, I don't really care about how you feel about it. I mean, I don't even really have a real hobby. That's not a real problem, and I still got it. I need $1 billion. Yeah, I've been in the lab, so I'm not when you see around thinking about my goals. So I'm not fun to be around. Now I want the whole field. Ain't no bush to beat around. I take it to the sky, so I don't ever see the ground. Ball call by, you can say I'm in the hunt now. Living out my fantasy, they love it when I touch down. Flyer than a plane or a pelican, I'm up now. Money, Drew Holiday, I'm playing for the Bucks now. I'm out in BK, Steve Nash. I don't see much, man, I only see cash. You can't be mad, you need to relax. And my favorite drug is hustle, I'm about to relapse. I'm getting all this money just from making these apps. Hope they take care of my hood when I'm paying each tax. I'm managing my ways, so they saying he's trash. But they look me up on Google, they be keeping these tabs. Let's be real about it. I mean, I don't really care about how you feel about it.
One of my best friends made this song too, so it's copyright free.
It's not a real problem, and I still got it. I need $1 billion. Let's be real about it.
I need $1 billion, y'all. All right, so SanDisk is out here giving us incredible insights into what's happening in the play. But let's go back to Gemini and see what they're talking about. The big bet is data centers here. The really big bet is data centers, that like the data center demand is just going to continue to rip for this kind of business. The only issue I would say is if the data center build out becomes like there's a few things that can stop the build out of data centers. Regulation, NIMBY, not in my backyard. Development and building cost, right? Like just think about it. For example, if like the whole future of AI depends on building data centers in one particular state, but that state has crazy NIMBY rules, high labor costs, etc. Like that will delay a lot of data center build outs. And if these things aren't built, then it is likely the case that they won't be buying all these crazy memory layers for it, right? Because like if you think about the memory purchase decision, like the memory purchase decision in the stack of infrastructure play like this is typically like the last one. Like I don't think memory is like a critical infrastructure component at the beginning of construction build. And we're talking about all new data centers, not current data centers. Current data centers, they're buying these things like crazy. It makes sense. But like for new data centers, it just doesn't sound like a super critical need at the moment. Like they need the stacks, they need the cooling infrastructure, they need the networking and cables just to ensure that like for the default memory and power, they can just like turn it on and it'll work, right? The extra incremental memory units, that's kind of like, all right, once it's live, plug in the memory stick to see what our capacity is, right? Like think about if you're building if everybody was building a PC, you know what I mean? Like what's gonna be like, oh Garrett, I like that thesis. NIMBY pushback, bad news sentiment, stock price goes down, data center not built, and regulation. But then all that happens, stocks collapse, and regulation flips, NIMBY gets satisfied, you buy in, and you get to see another rally. You know what I'm saying? So there's a bunch of different ways that you can play that. Yeah. So it's funny how you can like always turn bad news into sometimes good news, you know? I actually want to hear like some parts of the Q&A actually. Let's see, questions and answers.
Moving the business forward, it's not simply just increase about which that's going to continue for now another decade.
if, in this very, very huge, what seems to be quite, how are you thinking about
before pressing the keys.
All right.
If at
Q&A.
any time your question has
This
been
is like the most
addressed
important part that
and
we
you
should
would like
listen
to
to.
withdraw your question, please press star.
Can you
then
guys
2.
hear it?
The first question will come from Mark Newman with Bernstein. Please go ahead.
Hi, thanks very much, and congratulations on fantastic numbers today. Really, really great numbers, especially the third quarter guidance. So clearly what's happening is that prices are rebounding extremely at unprecedented rates. I guess my question is going to Dave's comments at the beginning. How are you thinking about long-term agreements? Obviously there's pros and cons to long-term agreements because long-term agreements lock in the prices. And when prices are going up so fast, you actually don't want so many long-term agreements, I guess. But I guess I'd just like to understand how you're thinking about that, how we should think about that in terms of your portion of agreements that are going longer term, and how that may impact going forward. That'd be great. And if you could also just touch on the supply-demand balance longer term, if in this very, very huge, what seems to be quite a sharp undersupply situation at the moment, if there's any plans to be adding supply or how you're thinking about that would be also great. Thanks very much.
Thanks, Mark. Appreciate the comments.
The
So let
CEO's
me
probably
say a
crushing
few
it.
words about what's happening in the business, and then we'll move on to the LTA. So there's a number of things happening in the dynamics of our business that are contributing to the results you're seeing. So first of all, it starts with the portfolio and innovation. Our BiCS8 node, which we've started ramping now and continue to ramp, is just a fantastic node. The performance, the QLC performance, the 2 terabit die, there's a lot of things that just position us very, very well. Customers are responding very strongly to that fundamental NAND technology we're producing. By the way, I'll just note that we extended the JV, which we're very happy about, which that's going to continue for now another decade. That's enabling very strong enterprise SSD portfolio. This is something we've been driving for a while. I talked last quarter we were going to see growth of that throughout the fiscal year. We saw, I think, 29% sequential growth in the first fiscal quarter. Now we just saw 64% sequential growth in the second fiscal quarter, and I think you'll see that accelerate from here in the second half of the fiscal year. So, that the third leg of kind of major business innovation is happening in the consumer business, quite frankly. A lot of new product introduction. This Extreme Fit product that we announced this year is really a breakthrough product. It allows our customers to very seamlessly and affordably increase storage capacity of their devices. It's kind of it's a bit of innovation in the USB space. You wouldn't think that would happen anymore, but it's not a removable product. It's designed just to plug in and stay. You see the agreements we're doing with people like FIFA, which could be the biggest event of this entire year. We have great branded products there.
FIFA products.
We look at our consumer business. We saw 50% year-over-year growth in the consumer business, so really strong performance there. This, improving portfolio, innovation-driven excellence in the product is allowing us to just have a better portfolio mix than if we look back over the last several quarters. We're literally able to trade out the lowest margin business for now the highest margin business, and that provides a significant tailwind to the business as well. And then on top of all of that, you've got the supply-demand dynamics, which are pushing the entire market forward. So it's really a combination of all of these that's driving the business forward. It's not simply just pricing, although, obviously it's great to be in a strong pricing environment. Moving on to LTAs. I'll talk a little bit about this, and I know Luis will have some great comments about this as well. So, as we reach points where we believe we're getting a more fair return for our technology,
and
and customers, quite frankly, are looking for more supply assurance. I mean, I think one thing to note on the market right now, this is a completely demand-driven phenomena, what's going on in the market. We've been very transparent for well over a year what our supply plans are. We're investing heavily in this market. We're investing hundreds of millions of dollars of R&D to push the roadmap forward. We're investing billions of dollars of CapEx, and we've been very clear we're going to drive, mid-teens to high teens bit growth on a sustained basis, which we think is a great market. And what's happening is we're just not getting enough visibility into what the demand really is. I mean, if we look at data center, we've had 3 forecast cycles now. Last quarter we went from mid-20s to mid-40s% growth in that market. Now we're looking at high 60% exabyte growth in that market for 26.
That's crazy, right?
I think our customers realize this, especially in the data center market. Their numbers are big. What they're gonna need in 26, 27, 28. We're even talking some of them about 29 and 30. They're doing their own planning. The amount of exabytes they're going to need are substantial, and so the long-term agreements are about coming up with a model where we can get confidence in supplying that level of demand, on a sustained basis. For us, it's not about what demand is next quarter or the quarter after that. There's not much we can do about that given the dynamics of our business. But we want to get the long-term growth rate aligned behind where the long-term sustained demand is, to your point, at attractive financials. So let me turn it over to Luis with that.
Yeah, I mean, David covered most of it. What I would say, Mark, is we're seeing customers across.
We need somebody in the Asian market to help us get
and across geographies. So
Let
this is not.
Let me pause this real quick. We need somebody in the Asian market that can give us intel of how to buy some of these things. Because we need to be exploring investing in Yokkaichi and Kitakami. All right. We need to also be looking at that substrates manufacturer in Japan that has a literally a monopoly on the substrates that's included in I forgot what I think it's like some chip or the EUV systems, one of those. Like, we have to be in the loop on that, y'all. We got to be in the loop on that. All right? We should be globalists. We should be global market allocators. You know what I'm saying? Like, we should be able to do this globally. That's what I'm saying. What y'all think, chat? What y'all think? What y'all think? All right, back to this. Play.
Just a few. We're really seeing a broad base, which is it's very interesting for us, and we're making significant progress. We're making significant progress with several of our customers who really want us to prioritize or assure supply. To David's point, that they see that as a critical enabler for their business, and that's what they're looking for. Now, to your point, we're being very thoughtful on how do we define a few metrics. One is the length of the agreement, the price at which we will transact, the quantities, how much of our business we want to put in there, and any prepayment component of that. So we're being super thoughtful, and this should be value accretive and not the opposite.
Right. Oh, this is how their JVs work, by the way, Edwin.
Great, thanks very much. And any quick comments on how you're thinking about supply demand longer term and any flexibility to add supply?
No, I mean, Mark, we've got our supply plans. We've been very clear on what our CapEx plans are, what our bit growth plans are. That's what they are. It's about meeting our customers at that supply level and understanding how we allocate that. And then as we said, it's about, all of us picking up our head and looking a little further out on the horizon as to what demand is really going to be in this market and what sustained demand is going to be. And, we just really need to get out of this idea that this is a transactional market where we only get a strong signal a quarter at a time. I mean, we get demand signals for our customers, in all fairness, on a yearly basis, but we really only transact that, we negotiate price every quarter, and that just makes it very, very difficult to increase any kind of spending because we just don't have visibility to the economics of it. And again, especially as the market transitions to data center, I think the data center customers are more willing. As Luis said, it's across all of them, but I think the data center customers, given their demand profiles and how big they're growing, quite frankly, are kind of a little more proactive in engaging in that conversation and really wanting to understand supply assurance several years out, and how do we come up with what are the business practices we can put around that. And that's as I said in the prepared remarks, that when I say we're early in this transition,
70%
that's
in the
where
last
the early
month.
part is. I think the business practices are going to change, and I think that's all for the good. We got to get through those conversations over the next couple of quarters.
Thanks very much. Congrats again, guys.
Thanks, Mark. We appreciate it.
The next question will come from Joe Moore with Morgan Stanley. Please go ahead.
Great, thank you. At the Consumer Electronics Show, Jensen talked about this key value cache and gave some numbers in terms of, I think, terabytes per GPU. Seems like a pretty big market. Are you getting indications around that? Do you think we should take that as kind of straight math? Does everybody have different implementations, and just the ramifications for what happens to data center NAND?
Yeah, Joe, we're working through that right now. We're working through it with NVIDIA and kind of how they're thinking about it. And of course, then we'll work through it with our customers about how they're going to configure it in deployments. So it's still a bit early. I'll say a couple things about it. First of all, none of that demand is in the numbers we're talking about, demand numbers at this point. I think it's a perfect example about how we all need to collaborate a little bit more on what future demand is going to be.
It's all over
Secondly,
all over the place.
our
That's what it
initial
sounds
looks
like.
at it, when we look at, let's say, 27 demand, we think, that's, roughly maybe 75 to 100 additional exabytes. And then a year after that, you can double that. So it is significant amount of demand. And I think it is, again, just another example of, NAND is just front and center in the AI architecture. That's very, very clear at this point, if it wasn't before. The AI architecture is changing, right? And that's not a surprise. Any kind of technology that's this profound and is being deployed at this much scale, we're going to continue to see innovation and evolution of the architecture. So we're going to stay very close to that. NAND's is just going to be a big part of that architecture. It's the most scalable semiconductor storage technology, or maybe the most scalable semiconductor technology at all. And so we're looking at those configurations. It's very real demand. We're just trying to get our arms around it, and then we'll put it in the numbers probably for the back half of this year, going into 27 and 28.
Great, thank you. And then as a follow-up, the enterprise SSD opportunity, how does that break down between TLC and QLC at this?
Is anything about this concerning to you guys? Just me processing it as a. All right, we voted on Apple. Let's vote on memory. Let's vote on memory. Not a memory stock, but just a memory segment broadly. I want to know if you guys are buyers or sellers of the memory stocks. Vote in the poll, on the YouTube poll, if you guys are buyers or sellers of the memory ecosystem. But I'm curious if anything about this is concerning to you guys. It's Buffett always says, be greedy when others are fearful when others are greedy. It kind of seems as if these memory folks are getting greedy. They're just setting whatever prices they want to produce whatever they want. You know what I mean? Garrett, I 100% agree. Follow Buffett. That's 100% a fact, bro. That's 100% a fact. For the rest of my life, I'm investing with his philosophy, But it seems as if it's there's crazy demand. There's a lot of supply. There is a lack of transparency on how much demand they actually have. Not like their current orders, but how much demand is expected for the file. There's no visibility into second quarter, third quarter, fourth quarter demand expectations, right? So there's a little bit of a lack of communication in that space. And I think that disconnect is causing a little bit of uncertainty and fear. I think that'll naturally converge and folks start getting aligned. But it's beyond that, you know what I mean? Oh, you were thinking the same after reading The Most Important Thing? Hey, Rich Topic. I'm so glad you're reading that. The most important thing. That's from Howard Marks. That's a good book. Good read. I read that one, and then I read The Warren Buffett Way every year. Every year. Those are two things to read. But I'm just curious, like what they have going on. You know what I mean, yo? SNDK Enterprise SSD segment, a previously high growth and high margin area, is under pressure from hyperscalers developing semi-custom solutions and competition from lower priced Chinese ODM competitors. I got that from the analytical site I use. That's good. That's good to know. I don't think folks are paying enough attention to like these overseas solutions. You guys remember when we were at CES and I met with that one like random Chinese company. What are they called? AData. I think it was called AData. Yeah, it was called AData. I wonder how they're doing. Pure Storage. Yeah, AData. They said that they were focusing a lot on enterprise. It's like AData technology. They were at CES. That was a W conference. I think I'm going to go back every year. It was cool because my hedge fund friends were there too. It's like a little reunion. And what's awesome is they let me go for free since I'm like a content creator. We just out here having fun, swanging. Yeah, AData in the last year it's up 367%. Year to date up 30. We just can't buy it, right? Let me see. Yeah, you just like can't buy it. That's the hardest part, y'all. All right, back to this. Let's see what they're talking about.
Point and how is that changing going forward?
I think we're roughly tracking the market right now. It's predominantly TLC. I would say it's tilted towards TLC, especially for us. And then, we haven't launched our Stargate product yet for the storage-based QLC. It's in qualification. We'll start shipping that for revenue in the next couple of quarters, which we're excited about, providing another tailwind of growth to our data center portfolio. And that will up the mix of QLC.
W.
But at this point, I think the overall market in our portfolio is it's tilted towards TLC.
Great. Thank you. Great numbers.
Thanks, Joe. Appreciate it.
The next question will come from C.J. Muse with Cantor Fitzgerald. Please go ahead.
Yeah, good afternoon. Thanks for taking the question. I guess first question, is there a way to quantify incremental demand for NAND related to AI infrastructure build-out? I'm not including KV cache, but we were mid to high teens before, and I'm curious now, based on your conversations with customers and the demand trends that you're seeing, where do you think the new demand growth CAGR is, looking out 26, 27, 28?
Great question.
I think the best proxy we have for that right now, CJ, is just what we're seeing in exabyte demand in the data center. And as I said earlier, two cycles ago, we were looking at, call it mid-20s exabyte growth in 26 for data center. Last quarter, we were talking about, we upped that to mid-40s given the CapEx cycle that went on. We're now looking at high 60s exabyte growth in data center is our forecast. And that doesn't include any CapEx raises on this earnings cycle. So, significant increase just quarter over quarter in demand. And we think most of all that is driven by AI, obviously.
Let's hear that again.
Perfect. And in the mid to high teens before, and I'm curious now, based on your conversations with customers and the demand trends that you're seeing, where do you think the new demand growth CAGR is, looking out 26, 27, 28?
I think the best proxy we have for that right now, CJ, is just what we're seeing in exabyte demand in the data center. And as I said earlier, two cycles ago, we were looking at, call it mid-20s exabyte growth in 26 for data center. Last quarter, we were talking about, we upped that to mid-40s given the CapEx cycle that went on. We're now looking at high 60s exabyte growth in data center is our forecast. And that doesn't include any CapEx raises on this earnings cycle. So, significant increase just quarter over quarter in demand. And we think most of all that is driven by AI, obviously.
Perfect. Thanks. And then I guess you paid down a considerable amount of debt in the quarter. You only have $600 million outstanding. Probably can pay that down this quarter. So curious, when you're in a completely, cash position, how should we think about, capital return, particularly around share repurchases over the coming quarters?
Yeah, we feel very proud of the progress we've made reducing our debt. Remember, we started with $2 billion, and it's coming down very, very quickly, 600 this quarter, and we'll continue to take that down. CJ, our priority is to continue to invest in the business as we have been doing and to build prudent cash reserves. This is a business where having cash on hand is helpful. We're not going to waste your cash, don't worry, but we're going to build prudent cash reserves, and we'll continue to reduce our debt. And at the right time, we'll continue to expand and give you an update. But so far, those are our priorities.
Thank you.
Thanks, CJ.
The next question will come from Jim Schneider with Goldman Sachs. Please go ahead.
Good evening. Thanks for taking my question. First of all, on the supply side, I was wondering if you could give us a snapshot of the...
Brother, slow down. Okay? Brother, slow down.
The factory network across Yokkaichi and Kitakami, and kind of where things stand now. I'm assuming utilizations are basically flat out. But as you think more tactically, sort of beyond this year about the high teens bit growth outlook, how do you expect to sort of ramp the overall kind of JV factory network over, say, the next?
Do you think this guy understands how fast he's talking? Like, do you think this guy processes what he says before he says it? Or do you think he speaks as fast as he can and then it just comes out? What do y'all think? You think he just like...
say, 18 months or so, and then maybe give us any kind of your view on the sort of industry greenfield capacity expansions that you see possible given some of the announcements of some of your competitors recently.
So, first of all, we have, as you said, we have two major sites, Yokkaichi and Kitakami. I think a big step forward this quarter is what we announced in extending the JV agreements around Yokkaichi to coincide with the agreements in Kitakami. So they now are all run through 2034. So that gives us really good supply assurance for the next 9 years. And we'll keep talking about what happens after that. But this has just been an unbelievable relationship with Kioxia for decades now, and it's going to go on, quite some time into the future. So we feel like we're in a really good position there. Look, we haven't had any underutilization in the fab for a couple quarters now. Yeah. We got past that a couple quarters ago. There may be a little bit of the memory of some of the costs flowing through. I guess those were all last quarter. We're done. So they're running at
Andrew, thank you for subbing to the fam.
Kitakami is where we're expanding. We just opened the K2 fab.
We're learning about memory, Shred Lord. Thank you for the sub. Thank you for the sub.
I think we've just JV, led by Kioxia on this part of it, has just done really good capacity planning and has good plans about how we're able to now expand into the Kitakami site as needed over the next many years. So we feel really good about how we're positioned there. As far as the rest of the industry. It's, as it's a long lead time. We see some announcements recently. I would consider those kind of normal course. We're all constantly building clean room space. As I talked earlier, this is a market on the supply side where we've been very consistent. We're going to grow bits, in the mid to high teens rate. We're going to do that through innovation. We're going to do that through, that innovation is going to take additional clean room space. That's all in the plan. I would expect to see continued spending to meet that number, but we don't see anything that's out of the ordinary. And, I think as all of us know, if you want to start building a new fab, you're talking years before you have that up and running and have production coming out of it.
That's a really good point, y'all.
Just a little.
Like we can just spend CapEx, increase capacity. That stuff takes a lot of time. Like there's a complete disconnect where it's like on the demand side, there is so much real-time evolution of demands, intensity, changing of preferences, all kinds of things. It's moving ridiculously fast, like no one can keep up. But then on the supply side, it structurally is a capital-intensive endeavor to actually evolve the business model. Like it takes a moment, it takes a while for it to just like evolve like that. You know what I mean, chat? So that's a good point.
A little bit of how we see the market. And, final comment.
And I think after that, we should also listen to KLAC. I think Boogie's bullish on KLAC. I want to hear about what's happening with KLAC.
And all this is factored into our numbers when we talk about supply and demand.
Thank you. And then maybe as a follow-up, could you maybe address, clearly you mentioned the qualification with another enterprise SSD hyperscaler customer. Exiting this calendar year, for example, how large do you expect your enterprise SSD exposure to be as a percentage of the total revenue? Thank you.
Yeah, we're not going to put an exact number around that just yet, but I would say just stay tuned. I think we said this, our business is going to continue to grow in this market. We've seen 29% sequential growth followed by 64% sequential growth. Without getting into too much detail, I think you're going to see a substantial step up next quarter as well. So we feel really good about where the portfolio is.
Comment.
Like I said, the
reception
from
16%
customers, and not just
hours.
hyperscalers, across the entire ecosystem of people that are building out AI infrastructure. The compute-focused TLC product we have in the market is really driving that growth right now. We're going to see our BiCS8 QLC product start shipping for revenue here in the next couple of quarters, which is going to be another tailwind for growth. And as we've talked about, the BiCS8 QLC performance has been extremely well received. So we continue to see very high interest in those products and work through the qualifications. And we'll look forward to continued growth, and it'll be part of the balanced portfolio we always talk about of how we're going to allocate our supply into that part of the market. But we're excited about where we're at and where we're headed.
Thank you.
Thanks, Jim.
The next question will come from Mehdi Hosseini with SIG. Please go ahead.
Yes, thanks for taking my question. Two follow-ups for me, and this is for the team. When I look at your guide for the March Q3 fiscal year, assuming low single-digit bit growth, there's a big jump in ASP and blended. What I wanted to ask you is, how should we think about the mix that impacts the ASP? Obviously, as you scale your SSD, there is a higher premium. There is more than bits and a premium that you capture or economic value that you capture. Is there any way you can help me understand? Because just thinking about the ASP absolute may give us a wrong impression. So any help you can provide would be great, and I'll have a follow-up.
Yeah, so the mix impacts that we have are less related to changes in our end market and more related to the customers, right, and how we serve the market. So I talked a little bit about this in my prepared remarks, and what you've seen is we're driving a better mix. We're partnering with those customers that value our relationship, that value our products, and therefore we're getting much better gross margin as a result of that. So there is a mixed component in that, to your point, Mehdi, and there is some pricing as well. We believe that the market will. Go ahead, sorry.
I was just going to say, just a quick follow-up. Is there any mix breakout you can offer us so that we're not so fixated with the raw NAND ASP trends?
Yeah, we'll provide that to you when we report next quarter. I don't have anything to share with you at this point on the guide, Mehdi.
Okay, great. And one question for David. Look, we're sitting here and there is increased shortage, is intensifying. You and your peers are involved in discussion for a multi-year contract. And as you highlighted, these projects take several years. Building a fab and putting equipment is a very long process. Why isn't there a more urgency? Why aren't your customers' customer aren't willing to commit more? They're committing with investment throughout the AI supply chain. But when it comes to memory or NAND, I don't get a sense of urgency. And if it's going to wait till second half of this year, that means the shortage is going to intensify unless the SSD exabyte growth of 60% may be just a short-lived. How can I reconcile the two?
I have lots of thoughts on that, Mehdi. I mean, first of all, I would argue that there actually is a fair amount of urgency and things are changing rather dramatically, rather quickly, right? I mean, you're talking about a market that's operated the way it's operated for, arguably crazy. Decades. And, the way that market is operated is there's essentially been a quarterly auction for NAND that goes on that sets the price. And then we all talk about what the price was every quarter. And then, on the supply side, we've tried to get it right on how much we supply and often get it wrong. And when you get it wrong, the economics just completely crater. And so we're trying to navigate out of that world. There's a lot of reasons why we're navigating out of that world. There's a lot of technology reasons and all kinds of stuff we talked about in the past we could talk a lot about. But like to change behavior on something you've been doing for, a decade and just wake up and within a quarter decide to completely change the business practices of an industry is almost like really, really hard to do. So, but I do think it's happening. I do think that customers are starting to look, like I said, they're starting to look further down the horizon, especially on the data center. I don't think this can be underestimated, this idea that now data center is the largest market in NAND. I mean, this is a market that's been dominated by, or not dominated, but where the primary customers, then smartphones, PCs, what I talk about is, I kind of view that as what's traditionally been the commodity NAND market. I hate that term, but that's what people think about it. The data center is not that market. Like the data center is not a commodity NAND market. The data center is NAND is a highly strategic product that's part of a very sophisticated AI architecture. And I need extraordinarily high performance, and I need innovation, and I need, a specific enterprise SSD that fits my configuration. It's kind of way on the other side of, I just need the same product and I can plug in any one from, 5 different suppliers. That's not, so that market now becoming the primary market and especially the primary growth engine is really, I think, starting to challenge the business practices of the way the market has traditionally worked. And, again, I'm actually quite optimistic that this is happening pretty quickly. Now, we'll see how quickly. I mean, do we actually get to the point where we're announcing contracts? We're not quite there yet. We've got, some that are coming along. But, from my perspective, on a relative basis, it's going pretty quick. For a market this big, we're talking 150 billion maybe this year. For a market this big, this many players, this much business transacted every quarter, to see it change as fast as it's changing is pretty remarkable, actually.
Got it. Thank you for the details.
Sure thing. Thanks, Mehdi.
Again, if you have a question, please press star and then 1. Please limit yourself to one question. The next question will come from Wamsi Mohan with Bank of America. Please go ahead.
Hi, it's Ruplu filling in for Wamsi. Can I ask Luis a question? This quarter, OpEx came in lower. You said you had a benefit from how you're managing NPI. Can you just elaborate on that, what that benefit was? And can you talk about capital allocation plans? How much are you expecting to spend on HBF and data center expansion, and as well as any capital return plans or M&A plans? Thank you.
Yeah, so let me try to unpack the OpEx question because I thought somebody was going to ask. So we made a recurring change to how we sell our products, right? And
yeah, what's the market cap on that?
We're now moving into charging for our qualification units. So in the past, we used to record costs as they were incurred, right? They were period costs. And this is the non-recurring element, which is a gain of a one-time gain as we move from period cost into inventories.
That's good.
As we now selling these qualification units. Does that make sense?
Yes, and that's clear.
Good. So we're going to get an ongoing saving as we charge our customers for these qualification units, and there is a one-time benefit as we do the transition and we go through inventory. On the capital allocation question, as I said earlier, our capital allocation strategy is unchanged. We will continue to invest in the business. We will build prudent cash reserves, which are very helpful for this business, particularly given still where we are. We believe we need to continue to build our cash reserves, and we'll continue to reduce our debt. So we've gone from $2 billion to $650 million, so we're making great progress, and we'll continue to make progress there. And we're fully funding the business. We're funding the business from a BiCS8 transition. We're funding our OpEx. We feel that we're properly funding the business itself.
Edwin, I'm
Are
at
there any
Chevron to watch list.
underutilization charges in the guide?
No, not on the guide and not on actuals either.
All right. Thank you so much.
The next question will come from Vijay Rakesh with Mizuho. Please go ahead.
Hi, David and Luis. Awesome quarter here. Just a phenomenal numbers. Just wondering on the 2026-27, what you're looking at in terms of bit growth, and obviously ASP pricing has been on a tear, but just wondering how the price trends have been across the different segments, from the data center to retail to consumer SSDs. If you can give us some color. Thanks.
Yeah. So the bits growth that we're seeing across 28, 27, 28 is consistent with what we talked, at the very beginning of February. We're still talking about mid to high teens bits growth every single year. And unless we see that demand is there and sustainable and profitable, we're not going to change our assumptions. So still our plan of record is that kind of high teens number for bits growth year over year. On pricing across what we call end markets, it's very interesting, right? What you see is prices are moving not identically, but pretty much at the same pace. We're seeing what happens is that NAND can flow to any market at the end of the day. So NAND will naturally flow to the markets that are most attractive. So when prices go up in data center, they do have an impact in other markets, to give you an example, right? So that's what we're seeing across markets. Prices go up pretty much across the board.
The next question will come from Karl Ackerman with BNP Paribas. Please go ahead.
Hi, thank you for taking my question, and congratulations for the very good quarter. Product roadmap, I think there are now your data center mix has reached 15%, and NAND flash is now increasingly being attached to AI compute. And it's creating new requirements for performance. So can you update with us your product roadmap to meet these new requirements? Like I think there are high IOPS SSDs, and you have engagements with on the HBF. So how those new products look like?
Yeah, so I think this is a very good example of
we got a lot of stocks to turn through. You see this, guys?
On and being driven out of data center.
There's all the stuff we got to dive through.
What I was referring to before. So you're right. What we call the compute focus, the TLC,
Fabrinet,
high performance drive is what's been driving the portfolio at this point. As I said, we just saw 64% sequential growth, so we continue to see really strong pull for those high performance products. As I said, we feel like we're extremely well positioned as we start to migrate those to BiCS8. But there's a whole bunch of new innovation going on, as you said. I think the innovation engine is alive and well across the whole industry, which is how are we going to satisfy the demands for the storage of AI?
Yep.
Models get bigger, more tokens get generated, caches get bigger. This is naturally a thing where you start to think about NAND and its tremendous scaling properties. And you're right, there's a lot of innovation there. There's the high IOPS enterprise SSD, which is of course something you could imagine we're working on. We had our own ideas about this 2 years ago, and we talked about it at our investor day, that we believe that there was a chance to re-architect NAND to bring it into AI. We trademarked that high bandwidth flash. I think over the last year, that's become a more recognized path forward. And, there's now lots of folks working on that. And we continue to work on it, by the way. We're very, very happy with the progress. We're deep in conversations with customers on use cases. We're designing the NAND die. We're building the controller. So that continues to go forward. Obviously, we'll have more to say about it, as we go forward and plans firm up. But, I think all of this is just an example of there is just tremendous opportunity for innovation as the AI architecture continues to scale. And, it's just incredibly exciting that we are just in the very early innings of driving this technology and scaling it around the globe. And we have, the industry, the technology industry, maybe writ large, is like incredibly well positioned to do that. There's some of the most largest, most capable technology companies in history. They're obviously putting an enormous amount of resources about how they drive this technology and scale it around the world at a very rapid pace. And I think that is incredibly exciting. I think this is going to go on. I think we're super early in this, and I think this is going to go on for a very long time.
This Fabrinet sounds cool. Trusted manufacturing partners for the world's most demanding OEMs. Leader in precision optical electronic mechanical manufacturing services. So they focus on mission critical components and modules and any mix. Also, by the way, guys, we have to just broadly start thinking about where this stuff's cool, but it's short-term oriented. I was reflecting on that last night. This stuff is really, really cool, but it's short-term oriented. And I was thinking last night, I was like, do we just want to be hustling and trading through earnings and just flipping our money every 3 to 6 months? That could work. We could do that. And there is a world where we just, double down on that. But what's really cool is if we can kind of find some of these industries that just have such defensibility, essentialness, things where it's just folks are just not spending any time at all thinking about it. And let me give you an example. Right? Everyone and their mama is focused on AI right now. Memory, AI value chain, legit, all that. No one is focused on Build-A-Bear. Look at the Build-A-Bear stock. Look at this. Look at the Build-A-Bear stock over the last good solid year, 36%. Last 5 years, almost 1,000% increase. You don't need a 1,500% bagger per year every single year. You just need a solid business that seems to be defensible, has strong competitive moat. I don't know a competitor to Build-A-Bear that has that kind of experience, right? I'm not saying we should buy it, but let me know down below. You guys buyers or sellers to Build-A-Bear? We need to be finding more investments like these because while everyone else is obsessed in the AI party, there's some other type of investments we could be making elsewhere that have incredible embedded moats, a real thesis. You know what I mean? Build-A-Bear shocked the world. People weren't even paying attention. People were asleep on Build-A-Bear, So that's just an example. I want to nudge us to start thinking like that. Just a little slight nudge, chat. You feel me? Just a little slight nudge. Slight nudge. Let's get back to our... Does that make sense, though? And Garrett, Fabrinet sounds cool. They have factories in Thailand, China, Jersey, California, and Israel. Okay. They are making transceivers, modulators, optical amplifiers, ROADM, silicon photonics, line cards. So they seem to be doing things that are very similar to Coherent and Lumentum on the optic side. They're doing stuff for EV. They're doing lasers and then high performance computing. Okay. They seem to be doing a little bit of everything. Yeah, they seem to be doing a little bit of everything. Let's see. Dun, 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 dun. Where's the revenue? Revenue mix. Yeah, this is what it is. So optics. Optics is making up almost all the revenue here. Optics is a big driver revenue for this. I wonder who they compete with on the optics side. FN stock. Let's see what they got year to date. Doom. Slow sleeper. Just been continuing to rip. I like this. It hasn't had as much of like a year to date crazy rip like the rest of them. It's slowly been, consistent. The optics play. I wonder who their customers are, though. Like, I wonder who their customers are as it relates to competition against other ones. And you also kind of have, like, their stock is going to be sensitive to China relations, trade tariffs in Thailand. But I think Thailand is strategically a good partner. Like, the way how I would diligence this is I would really look at every single competitor in the optic space and see where are they manufacturing, what is the exposure to geopolitical tensions, how friendly versus unfriendly their specific regions are, their availability of talent in those particular regions, and then the customer profile of each of those. Like we should honestly, you might be doing this in your dashboard, but like you honestly need to be having kind of like a grid per sector with like key criteria, how you would like rate them, right? Like within there should be like a memory grid of all the memory players and like how they rank across criteria. There should be a grid on all of the optics players and then how they rank across the different things. We should actually build that on stream. I think that's a really good like muscle to stretch. It's just like building these kind of like grids and things just to showcase how like locked in and focused we are on a given sector. Because then you build that kind of grid once. Granted, it takes a lot of time to do it, but then after you do that, you just like update it. That's like your tracker for the sector, and you kind of have like real-time pulse and forecasts. And over a while, you do that over a long period of time, you start to get very familiar on it. But we should kind of just do it in sectors that we like. I like optics. I really like optics. So, okay. What they got going for the boys, for the shred loads. Okay, back to SanDisk. Let's wrap up SanDisk.
The next question will come from Aaron Rakers with Wells Fargo. Please go ahead.
Wells Fargo.
Hi, guys. Thank you. This is Michael Sednoff on behalf of Aaron. I wanted to go back to the LTA discussion. Have you guys finalized any of these agreements yet? And if so, have partial or full prepayments been a part of
Garrett, how about we build that?
Agreements, or is that something?
Garrett, what are your thoughts on like what's the best approach and like how do you tactically build that? Like that's scalable, Oh, you're building it right now? Can you make a public friendly version? Because it's not like an Excel that I can just like have it in our chat capital tracker, right? Like it'd be cool to have like how that would look. Actually, let's build it right now. Optics. Right. Boom, 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 dun, 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 dun. And then for the optics ones, you just do here. This is how you would do it. You would do COHR LITE FN, little things like that. Right. Boom, delete row, and then it would be like date updated, date reviewed. I would call this the data refresh, right? And the data refresh just shows like the last time that we looked at the data. Right? And of course we have these, and of course we have this, but then there's a bunch of other things here. And then it would be like, gross margin, key trade, key manufacturing location, geopolitical risk rating, maybe like a high, medium, low, or things like that. I would do like customers, top 3 customers, listing them out. Like new wins, little things like that. Yeah, it's a lot of data, right? Like even this little thing here like will require a lot of data, but this is like tangibly how you want to like track and pulse each business, each key business in a sector. You know what I mean? Just to see like who's like the emerging winner from that sector. All you need is one, you know? Unless you want to do like an index fund and buy all of them. We're gonna call this one optics, right? Little things like that. CapEx spend, new wins, etc. Like this is how folks at a hedge fund do it, to where like they just own one sector. They have like a master tracker of every single name in that sector. MKSI owns a niche. We gotta check that out. And then like they just keep updating based on the refresh information. What is MKSI? Supplier, customer, segment, division. Where are you getting the supplier, customer one? AI, I assume? All right. And then... Oh, ADA, MKSI is pushing out earnings soon. We got to have a point of view soon on that, right? MKSI, watch list. Can't give up my sources. Boy, you look like I'm about to take your sources. I'm kidding. Well, if I had the money, I would get Bloomberg. Bloomberg has all that stuff available. Bloomberg, PitchBook, Nielsen has good data. And there's like a bunch of other sources you can pay for. There's probably some free stuff as well. But ADA, they're doing earnings on 2/18. So we should... Do you have a thesis on this one, ADA? Garrett's got to build it himself. I feel you, brother. I feel you, mate. Let's see. Events, presentations. I wonder what they got up on. Okay, 26. Webcast. Presentation. I feel like we looked at this before, didn't we? $1 billion of revenue. Electronics and packaging, specialty industrial. Margins have been improving. Or no, margins. You're building a universe? Yeah. I'm building a universe of just like key names across key sectors. I think that's the best way for us to do it. Just to like build the habit of well, I am and Garrett is too. Garrett's building a crazy universe. I'm not that good. You're copying my research methods? Thanks, man. Anything you all see me do, you can do it, as long as it's not illegal. That's the point of the streams. Do it in public. Bloomberg is awesome because it has just like a bunch of like proprietary market data, like on businesses, their trade partners. Like, look at this. Like Bloomberg, you can do. Look at this. Look what you can do on Bloomberg. You can have a terminal like this that outlines the entire supply chain of a company. You pick one company, and it gives you all of their suppliers and the percent mix of the suppliers. It has all of their customers, percent mix of their customers, competitors, like super easy stuff like that. Uh-oh. Two opposing views on MKSI. Hash it out, Shred Lords. What's the thesis? What's the thesis? What's the thesis, Shred Lords? I'll add it to our watch list, though. I give you that. MKSI to our watch list. And guys, I know we are spending a lot of time in the world of AI, but I'm telling you, we need to be thinking about those sleepy industries. Let me go to my analyst. Let me tell my analyst real quick. I want you to think as a long-only investor with training from Warren Buffett, Charlie Munger, Howard Mark. I know he's not a long-only. He's like a credit guy, etc. Oh, wait, hold on. There's another hedge fund guy that was like really, really, really good. Let me try to find it. There's like another hedge fund guy that was like electric. Let me see. He put some of his memos out. He crushed it and then closed his fund and got out the game. It's where is the name? Do you guys know what I'm talking about? He was the AutoZone guy. You know what I'm talking about? AutoZone investor. He had the big thesis on AutoZone. Let me search my benchmarks. Oh, Alan Meckham. Alan Meckham. I'm going to read this for y'all. Let's first train our model. You specialize in the small and mid-cap stocks that are undervalued with durable underlying industry dynamics, customer behavior, pricing power for the company, and strong brand equity, etc. While the world is obsessed with AI, I want you to think critically around the boring industries, businesses that are silently growing and proving their moat. I want these to be good long-term hold flagship names with #1 market share and dominant position with evidence. Strong operating history from earnings reports and consistently beating consensus and strong industry tailwinds. Let's see what it comes up with. Let's see what it comes up with, y'all. I was really thinking on this one. Industry dynamics, pricing power, strong operating history. Cintas. Bro, it gives me Cintas, Waste Management, Clorox. Wait, Clorox, low key. Low key. Ain't nobody touching Clorox. I didn't think about that. It's like a consumer name. Ain't nobody, it's not doing anything. Stuff sucks. The heck? Yeah, this business sucks. Clorox. What else? I don't like that one. Home builder. Nope. These are too broad. These aren't good enough. Need more niche names. Go down to only small cap. Like I'm trying to find some good stuff, you know? And while we're looking for that, I want y'all to read this. So, AutoZone, right? And AutoZone's crushed it. Check this out. So there's this interview. There's this legendary epic hedge fund investor. His name's Alan Meckham. He's one of the most like blue collar style investors, doesn't build any models, invests purely off of vibes, and just like thinks critically about a business. But let's read this together. The interviewer says, let's switch gears and discuss the investment philosophy behind your track record. Help us understand the kind of investor you are, perhaps by highlighting a couple of examples of companies you have invested in or decided to pass up on. What are the key criteria you employ when making an investment decision? This is amazing. He says, it's really quite simple. I need to understand the business like an owner. That's like a Buffett style. Hold on. Wait, hold on. Check this. We're going to make this a clip. We're going to make this a clip. So this is one of the most under the radar, talented, value-oriented investors that no one's ever heard of. And it is easily one of the best ways to become a better investor just by studying the greats. Don't study the charts, study the greats. Study what they invested in. If they've publicly articulated their investment philosophy, read up on that, pressure test that by trying that today and what they're doing and building. And Alan Meckham is one of those type of guys where he raised a small fund. He just put his head down and grinded. Funny enough, his office wasn't even flashy. His office was like on top of a Taco Bell in like some random city. And it looked like it was in a strip mall. Isn't that hilarious? But his fund, Arlington Value, was started at 22. So if you all are young out there, don't think you're too young to start a hedge fund. He started his at 22, and he generated 37% annual return on average, 37% annual returns. He crushed it. He found a few great businesses and then doubled down with concentration, made his bag, and he got out the game. He shut down his fund after that. You know what I'm saying? I think he still invests, but I think he just invests his own personal capital through a family office. And that sometimes it's a play. Make a bag and then pivot your thing to be 100% just your money. But this interviewer asked a really good question around, like, how do you describe your investment philosophy behind your track record? And what's the criteria you look at before you make an investment? And this is what he says. It's really quite simple. I need to understand the business like an owner. That is very much Warren Buffett value-oriented, buying a business is literally buying a stock, is literally buying a business. The firm needs to have staying power. And what does that mean? Staying power means that the business will likely be around for the next 30 to 50 years because it has been around for the last 30 to 50 years. Blockbuster, no staying power, right? No staying power. NVIDIA, likely strong staying power, right? Apple, likely strong staying power. Coca-Cola, incredibly strong staying power, right? And then he says, I want to be confident about the general nature of the business and industry landscape on a longer term basis. I'm big on track records and generally stay away from unproven companies with short operating histories. Like for that, this is the exact same philosophy that I look at when I'm buying a private business for the holding company. Like I'm not going to invest behind a business that, like I'm not investing behind a business that has a 5-year history. If someone started a company in 2024 and they're selling it in 2026, I instantly pass. Why did you give up or cash out after 2 years of operating? One, that's a red flag. The second thing is, why aren't you it also doesn't prove that you've survived the recession. Like I want to see a business that has gone through the 08-09 financial crisis, that has gone through COVID, that has gone through the tech bust in 2021. Ideally, the dot-com bubble in 2001, that'd be even better. Like I want to see all those data points in organized, clean financials. It sounds kind of hardcore, but I would legit ask a management team for the full P&L and balance sheet for the last 30 years annually, and maybe monthly if I want to go crazy with it, right? Like I'm asking for all of those. Oh, good question, Garrett. Garrett asked, since you don't like young companies, what's your opinion on Anthropic? I think everything that's in the AI space is completely unproven and a severe down market. It's going to be very difficult to see how these companies, these companies perform really well because they have an abundance of cash and capital. And if they need to continue the growth engine, they have strong access to capital. If Anthropic wants to raise $1 billion tomorrow, they definitely can because the markets are booming. But if we're in 2001, 2009, TBD. Like, how does this business perform when they need the right size? Do some reductions in force. When they need to adjust pricing because of the competitive dynamics. Like, too many things have been too good for too long that a lot of businesses have been started in this environment. So a lot of it is unproven. The business that I hopefully acquiring next Friday, it was founded in 1994. There's a lot of operating history I'm looking at. You know what I'm saying? So that's just that. All right, back to Alan Meckham. I also believe in a heavy dose of humility and intellectual honesty is important when looking at potential ideas. I love this. I really love this primarily because he goes in with the humility, understand that he doesn't understand everything. Buffett says a similar thing. Like, we like to buy businesses that we understand, like simple to understand businesses. His is kind of like go in and be humble and, intellectually honest if you don't understand something, right? I think the premise of that is simply just like try to invest and buy businesses that like you understand the business model, the unit economics, and it's not like too confusing. Do you guys know Warren Buffett has 3 piles? He has 3 piles. He has a not interested. He has a read, aka interested, and then the third one is too complex. That's how he spends his day. He divides 3. Like, if a business comes in, he looks at it and puts it in 3 piles: not interested, interested, and too complex. All right. Then Alan says there's a strong undercurrent constantly percolating to buy something. It's fun, exciting, and feels like that's what you're getting paid for. This makes it easy to trick yourself into thinking you understand something well enough when you don't, especially if you're in the investment derby of producing quarterly and yearly returns. This is so freaking good. The investing derby. The investing derby is being these long, short equity funds, Tiger Cubs, Code 2s of the world that like you're chasing quarterly returns. You're listening to all these earnings reports. Like, you constantly want to deploy. You constantly want to short when market's correct. You constantly want to you want to do a lot of activity in a sense. And when you're in kind of like that race, especially if you live in some of these big cities where all your social discussions around these names, all the things you're traveling to around these quarterly earnings, you can get really lost in the sauce and making it feel as if you need to come up with new ideas. You need to be on the pulse of like so many different sectors, and you need to really dive into it. When in reality, unless you're like a hyper genius, you really just learn something in like a span of like 3 weeks. And you're making a big investment decision on it, right? Like folks like Alan and Warren Buffett, they argue, pick a few circles of competencies, 3 to 5, and literally just invest in those for 20 years, 30 years straight, right? Like, live in the business that you're operating in, When looking at ideas, I have a Richard Feynman quote tattooed on the back of my brain. Don't fool yourself, and remember, you are the easiest person to fool. Dang, that's deep. All right, ultimately, what tends to cover all the bases is the mentality of buying the business outright and retaining management. Critical to implementing this approach is, again, having a comparable or compatible investor base, aka your LPs. If you have annoying LPs that are just like, chase quarterly returns, do boom, boom, and boom, or like, hey, we need more juice or fuel on the fire, you're not doing enough, or they don't give you the leash to go actually do stuff, like that's a terrible LP base. The best LPs give you money, trust you, and don't bother you until you return the money. Those are the best LPs in the entire world. Literally the best. Whose bread I eat, his song I sing. Let me read that again. Whose bread I eat, His song I sing. Interesting. An owner's mentality forces you to think hard about the important variables and makes you think long term, as opposed to in quarterly increments. So that's going to be the challenge for Jack Capital. Like, I think our challenge for Jack Capital is going to be expanding beyond the horizon, like expanding beyond the horizon of simply just focusing on quarterly earnings prints. I think we're looking at the earnings stuff and we're listening to it now just so we can be smarter around what's happening and just learning. I don't think it's the time for us to jump in everything that we look at, but I think it's for us to learn and understand the pulse. I don't think we're at the point of understanding the pulse. He can speak like this because he probably knows the pulse of his circles of competency. We're still finding out what's our circle of competence and then getting up to speed on it. So it's all educational right now. And he says, in fact, I think very little about quarterly earnings and more about the barriers to entry, competitive landscape, aka threats, the ongoing capital needs and overall economics, and more importantly, the durability of the business. I love that. I need to print this out and put it on my wall. Over the years, I've come to realize the importance of management, so we look hard at the people running the business as well. I always was curious, like, how do you diligence management? Especially like for publicly, like for on the private side, it's very easy to diligence management. You just see like where they worked from, you get references, you ask employees about it, like you do some surveys, like it's pretty straightforward on the private equity side. But from the public side, like how do you assess the quality of management? Like that's something that like for me and my investor toolkit, I honestly got to get better at, is like trying to figure out how to diligence management. And I think it's some of the public funds are have a leg up and are lucky on that because they can like travel, get dinner with management teams, go to these conferences where they speak, and they can kind of build a relationship with management and they can kind of assess and feel like if it's a good or bad leader. Like Tim Cook, he's so public that it's just like people can get the feel and the vibe that he's a good leader. Jamie Dimon, good leader, right? Little things like that. The price needs to make sense. Okay, that makes sense. All right, the criteria bar is set high. We really try to avoid mediocre situations where restlessness causes you to relax investment standards in one area or another. That's important. Do not let restlessness and idleness prevent you from being patient for a good opportunity. When things are slow, be okay with that. Just keep learning. When things are very slow, I'll repeat that. Be okay with that and keep learning. All right? When things are slow, do not do the opposite and try to jump into the quickest thing that, that's in front of you. There's like that saying that says, like, I forgot the saying. What's that thing where it's just like, when you're starving or when you're thirsty, the first thing you drink shouldn't be what's in front of you. If it's like gasoline or something, I totally butchered that analogy. But whoever knows what that is, drop it down below. There's something like that, but you get what I'm saying, all right? Relax. We really try hard to avoid mediocre situations where restlessness calls you to relax investment standards in one area or another. We also stress test the business under various economic scenarios and look to a normalized earnings power. We passed up many seemingly attractive ideas over the years as we would ask, what happens under 7 to 10% unemployment when unemployment was in the 4 to 5% range and 6 to 8% interest rates? And we would ask, is the business overly reliant on loose credit extension and frivolous spending, aka a bunch of loose VC growth equity dollars? That's really important as relates to your point, Garrett. Like for Anthropic, I'm not saying it is the case, but like, is this business reliant on funding crazy marketing, spend and burn with loose credit or frivolous, chill, easy dollars from the VC and growth capital markets? Many names didn't hold up under these stress test scenarios, so we passed. We bought AutoZone a few years back as it held up under various adverse macro scenarios and in fact performed exceptionally well throughout the Great Recession. I constantly try and guard against investing in situations where the intrinsic value of the business is seriously impaired under adverse macro conditions. I love this quote. Listen to this. We prefer cockroach. I love this quote. It says, we prefer cockroach-like businesses, very hard and almost impossible to kill. That is so good. I read this and I bookmarked this like earlier this year, but this might be the most important tweet I've ever read. You know what I mean? This is something that you print out and put on the desk of every single analyst at your hedge fund, just to remind them that don't let the restlessness and inaction lead us to investing in things that we don't understand. Don't let the hype prevent you from understanding the true intrinsic value of the business. Don't be lost in the quarterly chase. Lock in and find cockroach-like businesses that are very hard and almost impossible to kill. Yeah, he has some very good research tools. Yeah. But he isn't crazy technical savvy either. There's another interview of him. I think the full interview of him showcases that he's a very simple guy. It's not crazy models or anything. And I think it's just honestly looking at the business's P&L across the years and then seeing how it performed. And we live in a world of AI where we can easily, in the world of AI, we can easily just have it download and scrape all the data from every single 10K for literally the last 50 years, put into a table, and then stress test it, whether or not it did good or bad during economic scenarios. And then it gives you a long-term average of if certain macro indicators look like this, it likely correlates to this kind of performance in the underlying stock. So therefore you can likely expect a reasonable performance of boom or boom in 2026, 2027, right? I think there's ways to draw correlations like this that I don't think a lot of folks are paying attention to. But my mission with Chat Capital, we got to find these cockroach businesses that you just can't kill, you can't get rid of. And I got to challenge myself. I was looking at Colgate, right? And I was not Colgate. What was it? Clorox. And I was oh man, this is boring. This is small, $13 billion market cap. Year to date, up 8%. Over the year, hasn't really done anything. Let me not be too sensitive. Let me lock in real quick. Over the last 5 years, it's down 50%. Let me first understand what's going on. Clorox is a simple business. And by the way, this is not investment advice. I'm not recommending Clorox. I'm just giving you a good case in point example of how to start your intellectual journey, right? Clorox is a business to simply understand. They make toilet bowl cleaners, I think. A bunch of other stuff. I use it for their toilet bowl cleaners, right? And the stock is at a pretty impressive entry point if the underlying fundamentals are good. Now, the next step, we need to understand what is the narrative driving the downward pressure on the business. Is it spend? Is it competition? What could it be? If everything that we understand operationally about the business is that nothing has changed structurally, it's just a matter of investor rotation into more exciting opportunities, I don't know, AI and stuff. But look at the long-term trajectory here. Clorox has been around since the 80s. It's not going away. Granted, it started to track the tech tailwinds and all that, but it could have opened up a pretty compelling entry point. I don't know. I'm not saying we should buy this. If we want to, we get to vote it into Chat Capital and vote live on stream. But I'm not saying we should buy, but it's just it's one of those things where it's this could be a cockroach business. So we just got to fundamentally understand what's going on. And it could be a thing where they are just consistently losing share to some other provider. There could be huge chemicals, tariff implications, like Garrett says, that it's just increasing the overall cost basis and the margin profile is just drastically being, pinched. But all that are short-term quarterly noise. Don't let that distract from the fact that this could be a cockroach business. So you got to truly understand, hey, are people going to use Clorox 20 years from now? Do they have pricing power? Can they fix their supply chain and get away from the tariffs and rising chemical cost inflation? Potentially. And then on top of that, we got to understand the quality of management, right? Have they been switching CEOs every 5 weeks? How's their governance? Who's on the board? How's the leadership look like? How's the product innovation? Little things like that is where we need to focus our efforts on. But from earnings, they're beating earnings. I mean, they had a bad dip in 2025 March, but it's they seem to be crushing it. And little areas there. And then what's likely happening because of the beats, but the downward pressure on the price is likely guidance. But don't let short-term guidance distract from the fact that this could theoretically be an impressive cockroach-like business. And for something like this, like you're not banking on the quarterly hit. You're banking on the 50-year thesis that this business will still be around. And like I said, I'm not condoning to look at Clorox. It's just an educational case study of like, think about things that are very hard to kill. And as a funny example, I asked my Gemini to find things like that, boring businesses with good moats, and it said Cintas, Waste Management, Moody's, Clorox, Pult Group. I don't like most of those, but you get what I'm saying. And then I asked it to dive even deeper. And let's see, it came up with United States Lime and Minerals. It's too exposed to commodity. It's in the business of lime and limestone products. I don't know. That seems to be like a heavy logistics, weird, capital intensive business. Oil Dry Corporation of America, producer market of sorbent products, industrial and retail. Oh, wait, hold on. Whoa, hold on. This one is a global producer and marketer of sorbent products, primarily industrial and retail cat litter products. Hey, folks getting cats. Everybody I know got a cat. I ain't got one though. And it's got strong net income, manageable debt to equity, strong and consistent cash flow levels, like little things like this. And then I'm just gonna keep asking AI to keep diving deeper and deeper and deeper, right? To just source and find me great businesses. But that's a WA. Like the moral of the story is think like Alan Meckham, y'all. Think like Alan Meckham, where you're able to separate yourself from the noise and exclusively focus on those 3 to 5 areas that you call your circles of competence and just truly understand the needle moving underlying business characteristics as if you were an owner of the company, and then hold it for a very long period of time and let it compound. That's how you rock, y'all. That's how you rock if you want to like play the public markets like the Buffett way, in my opinion. Oh, let's rock. W setup. That was we just filmed a YouTube video right there. That was a fun little segment. We're gonna upload that to the second channel. What's crazy is that teaches people a lot. Like whoever watches that, they're gonna learn a lot. I'm gonna add a little intro, add a little flair, and then I'm gonna have the team pump it out. Low key Clorox might be a vibe. I'm not gonna hold you up. Clorox low key might be a vibe. I might have to do some diligence on Clorox. And Clorox last week is buying Puracell, the hand sanitizer business, for $3 billion. Bro, what? Heck yeah. Right? Like everyone's looking at the stocks that ripped 100%, 1000%. No one's looking at the stocks that are down 50%. That's just like, you got to think about fundamentals here, y'all. Like the way you want to think about it, when the AI boom is over with and folks get back to normal, you want to be already allocated to the names that are most durable and most like clear moat. Because there's going to be a flock to safety, and there's like a flock to safety. They're going to try to find the quality good names. The Coca-Colas, potentially Clorox. I don't know. We got to do some diligence on that. Yeah. Yeah, the ones that are down have really good room to go up, especially if the fundamentals haven't changed. Like if it's simply like if it's simply just like a investor opportunity cost type of thing, to where like folks are just jumping into memory because like they have FOMO, take advantage of that. Literally take advantage of that. Be fearful when others are greedy, and greedy when others are fearful. When people are like worried like this, like why is the stock down 50% and something that is in almost every single toilet bowl? What? Like what else are you guys using to clean your toilet bowls? Granted, there's probably now I'm thinking about it, there's private label, right? Target has a brand, Walmart has a brand. There's a bunch of competing solutions, but like they suck, in my opinion. I'm not saying Clorox is a buy, but it's just like that chain of thinking, we need to be doing that a lot more, and that's how we challenge ourselves as Shack Capital to just like improve. It's very fun and exciting to like listen to the noise, but it's better for our long-term benefit for investing to like swim in the spaces where no one's paying any attention. You know what I mean? The investors that made all the money were the ones that were looking at optics 2 years ago before everybody was obsessed with it. For the ones that were like invested in memory 3 years ago before anybody was looking at it. Odds are they're going to be the ones that are just like benefiting from just like this crazy rip and they're selling, right? But there was really smart money first dollars in when everyone else was like not even paying attention. So you can either like play the focus on a durable 50-year asset, or you can play what's around the corner that's sleepy that not enough folks are looking in as it relates to a type of boom. And that's how we're trying to find the deeper and deeper and deeper choke points of like what's around the corner. Clorox has Brita filters? I didn't know that. Wait, they do everything. Clorox product portfolio. They have charcoal, hand sanitizer. They have ranch, Brita filters. Yeah. Cat litter. Low key. Low key. Clorox ranch. Yeah, brother. Toss it on the chicken wings, man. Toss it on the chicken wings, boys. That's so funny. That's so funny, chat. We out here rocking. But here's our watch list. I'm adding Clorox to the watch list. And you're going to be like, why is that on there? That's not sexy. I'm like, that's the point. It's not supposed to be CLX. It's supposed to be boring. CLX, right? Yep, CLX. So let's challenge ourselves to think more like Alan Meckham, all right? Let's try to challenge ourselves to think more like that guy. And tomorrow we gotta tap into Chevron. We're gonna read some of these. We can have AI piece together the patterns across all of these. Start populating a dashboard. Like we need to have a memory dashboard. I don't know why we don't have that yet. We need to have a memory dashboard. And then we need to have it start coming up with more ideas like this. These are better. Keep being creative and find me more. Put AI down the rabbit hole. Put it down a rabbit hole, y'all. Put it down the rabbit hole. This is like one of the sleepiest businesses of all time, and it's not even an investor recommendation, and it's just like we're learning here. While everyone's focused on AI, y'all, no one is paying any attention to Clorox, which is almost in every single toilet. And this is a learning experience to just like invest like Warren Buffett, Alan Meckham, to find businesses with 50-year moats, strong brands that you can get an attractive entry point when everyone's obsessed with crazy AI names, find things that are falling because of short-term noise that have 50-year potential. I don't know about you, but there's Clorox in my toilet bowl. And like I said, this isn't investment advice. This is just a learning case study of what a durable brand looks like. And boom. Something about this is appealing. I'm going to look into this more. I got to research this. And I'm not an investor yet. Maybe. Maybe. I like Clorox. Let's see what else they have. United Rentals? I don't know. That's like a private equity style play, though. John B. Sanfilippo and Son. That's a crazy name. Distribution of nuts and nut products. Oh, you're in the energy markets? Fisher, Orchard Valley Harvest, etc. Give me 10 more. That's not enough. We need a lot. United Rentals. Donaldson, a leading manufacturer of air and liquid filtration systems. Razor and blade model, where the initial equipment sale leads to high margin recurring revenue. Ooh, here we go. Consumer products, dispensing pumps, caps, high margin healthcare solutions. I'll be very excited to see like if every healthcare has an Aptar cap in it. Seco Environmental Group, pollution control, providing products used in the energy and environmental industries. Okay. Franklin Electric, systems and components for moving water and fuel. It only gave me 3. I asked for 10. My AI's clocked, y'all. My AI is clocked. My AI is clocked, chat. But anyway, it's time for Kenny Finance to go to the gym, y'all. And as you all know, every day is another day. Your daily deposits to learn and get smarter, to work hard, to help inform your view on the world. And if you're an investor, simply to allocate capital to compelling and amazing ideas. That's what we're here for, you know? So this was fun. We listened to a lot of earnings calls. We had Apple. We had SanDisk. We're getting gains, money, and muscle. That's the name of the game. Hopefully you guys are being active, moving your body, getting some sunlight, eating healthy. None of this stuff works if you don't have a long, healthy, abundant lifestyle, right? That's what we're talking, y'all. So tomorrow, I'm going to be back probably for a later stream. So it's not going to be as early. So it's probably going to be like a 6:30 PT stream. And we're going to, Edwin's going to tell us a little bit about his Chevron earnings. And then we're going to dive in together. And then I want to help Edwin put together like a management meeting agenda. He's meeting with an owner. If anyone else has anything they're working on that they want to help out, they want my help with on stream, put in the Discord. I got you. We'll put some thoughts on together. And I don't know. Selfishly, I just want to play some Arc Raiders. I just want like a mental break to just play some Arc Raiders and get some goop, y'all. So I might play that on stream or off stream. I don't know, but regardless, this weekend I'm gonna play some of that. But I appreciate everybody checking in for this stream. It was a bunch of fun. Like we learned so freaking much. My brain expanded again. All right, and that's how we're rocking and rolling. But I'm challenging us to find more cockroach-like businesses. Find those businesses that are just hard and impossible to kill. While everyone's focused on AI and memory and all that, that's cool, that's sexy, it's fun. But what's durable over 100-year horizon? That's what matters most. All right, so let's stay on the hunt. Good luck to everybody tonight. Get some good sleep. I'll catch you guys back here tomorrow. And we're just going to catch a vibe, make some smart money moves. And as always, take care of yourselves, take care of each other, peace and love. And I will catch you shred lords tomorrow making some smart money moves, y'all. Peace. Bye-bye. Smash that like button and subscribe.